Hello, everyone. Hello. Our new session is starting. Today we have a special new coach, Tiger. Hello, Tiger. He's from the US. So, how are you doing there?
Hello, hello.
All good.
Wonderful.
Excellent.
Wonderful.
Excellent. Can you tell me, Tiger, just to know what are kind of your trader are you? Are you a swing trader, intraday trader? What do you prefer to trade?
Yeah, so sorry, I'm getting some kickback on my let me.
Hope it's well.
Yeah, I'm getting like an echo.
I can hear you very well. I can hear you very well.
So yeah, so I've been trading now for going on 11 years. Mostly Forex in that time. I've kind of gotten into indices, crypto, and gold and silver a little bit of late. The first decade of my trading, I mean, I was primarily a technical trader, but really hardcore the last year or so. I've been digging a lot deeper into fundamentals. In fact, I've found a really good website where it kind of packages all the fundamental reports together in a one pager, so that I can just take a look and see where the big money flow is going, because I like to use that and ride the coattails to jump into trades because of that. So I still got to figure out this echo. It's like back and forth.
Maybe it's on or your side. Here I can hear you very, very well.
So, yeah, same my side. So
yes. So let me start maybe to share a little bit the screen. Maybe to start first from this week general description, and then to start just to show the charts of this day. So first, related to the calendar, just to analyze this week, because it's Friday, and we see everything that's happened related to the weekly bias that we got on the major currency pairs. So just a little recap. This week we had two, I can say, very important news related to the core CPI and core PPA, both very bad for US dollar. And on the other side, we got very, very bad GDP, minus 0.3% for British pound. So this was, I think, the biggest news that we got this week. And actually, the charts showed some ultimate highs for euro dollar and British pound dollar, which was very good. The US dollar index was bearish. However, these days interesting because we see some kind of the price rejection. So I will just share my screen just to show what's happened today and what's happened with my trades. Today I am a little bit nimble because of this price. So I will show you first my chart of the US British pound dollar. What I look on this chart right now is my choppiness index. I use this indicator especially on Fridays to see the trend. If we go a little bit in the past, you can see, for example, on Fridays, this is the Friday, 6 June last week, we got very choppy price during the whole Friday. And you can see that the level of choppiness index was above 50, which means that days are not so good for trading, trend trading. Only thing that we can do that days, if we have some bigger bias, we can try to enter into some low price or high price and avoid some kind of the trading, because really Friday can be very frustrating month. However, these days, as you can see, the choppiness index, this is something that I don't see very often. We have a clear bearish trend for the major Forex pairs, especially euro dollar and British pound dollar. What's happened today for British pound dollar, for example, is that just early in the morning, we got a strong bearish candle. And during the Asia session, we break a simple moving average 50. In the same time, we got, I like to draw a trend lines and relative strength index in bullish pattern for British pound dollar. And it was broken just during the Asia session, especially during the Frankfurt Open. And what's happened then is that during the Frankfurt Open and UK Open, we went a little bit higher, just again to retest the simple moving average 50 and to retest the previous trend line, if we watch like that. And after that, the price started to go down again. And very, very similar situation we have for the euro dollar. Actually, the euro dollar, maybe it's a more clearer path because bearish trend since we got this bearish push down. And this sometimes can be very dangerous. You take a Fibonacci retracement, then you watch and wait for 50%, 60% and enter into the trade. But the problem that I have usually with these trades is when you when you have several days trend line and you break that trend line, after that, I don't like to hope that price will go again up, just because I wish that, or Fibonacci retracement can something show me. In that case, I want to be out. I'm out here. If I want to do something, maybe some scalp trade to sell. Actually, today, when we reached this simple moving average 50, I made one 20 pips trade, sell trade, up to 1.3230. Just on the Frankfurt's low. It was I can say it's just a 20 pips order, nothing special, because it's very hard to trade when you don't have a clear trend, or if you are very, very low, like we are. I missed the opportunity to enter during this huge drop here, and after that, to chasing the price, to sell the price, it's never the good idea. So
that
today,
was the
like I said,
the breakdown was the
yes,
was the Middle East news. Yeah, that was it was a fast move because obviously they had the news out of Iran kind of thing.
Yeah. So this movement, we can judge, we can analyze, we can do various things about that. But generally, I think that market shows what the market shows. So I need to respect this price levels right now, and I will not try to buy euro dollar and British pound dollar today. Even I want to be bullish, but today is not the day for that. Right now, we create some consolidation. We are whole European session and now US Open. We are around these levels where was the British pound dollar, and for euro dollar, we are somewhere here, and there is nothing special there. On the other side, US dollar index, and the US dollar index starting from this week was bearish, and since the last Friday, we started to go down. And as you can see on my relative strength index indicator trend line, we down, and today we broke this trend line, and now US dollar index is, we can say, we cannot say that we are bullish, but on intraday level we are bullish. And now, like I said, I don't feel comfortable to go against this bullish trend of US dollar and to buy euro dollar and British pound dollar. However, if I go on the weekly chart for the US dollar index, I can say just bearish. The whole market structure is bearish. This week was bearish, but this day is not bearish, and this is why I'm out right now. So I will just monitor what will happen here. Another not dangerous, but what I'm thinking is, if I go to the past in last 5 years, this yesterday low for the US dollar index was really major level. That level around 97.7, I think, where this my blue line is. As you can see, that level was really strong, and especially in 2017, in 2020, 2021, then in March 2022. All these moments, this level was really important, and we got then some spikes, reactions, etc. So it's normal that we have some kind of reaction at this level. So I don't say that that market can shift and go to the bullish US dollar, but I only need to say that we need to be a little bit cautious right now, and just to watch and to be ready for all scenarios that can happen. Based on my previous analysis for the years 2020, 2021, we just give you idea that when we reach a 1.362 level, we got on the 1.345 couple times. So price just to play around that two levels in 2020 and 2021. Of course, that doesn't mean that we'll do the same pattern now in 2025, but I know that it can be volatile, and that volatile range can be really big. So this is why I need to be really ready to enter on both sides, either to buy side, either to sell side, just to play and respect the levels. So this is the three things that I'm watching: Euro dollar, British pound dollar, and the US dollar index. All other pairs, I don't have nothing interesting there. I'm seeing, for example, the US Japanese yen last 2 days pushing higher, which is interesting, because my plan was actually to make some a bigger sell trade here, high price for that, some rejection or something, and right now the market is some bullish potential, and so I'm out of this trade and just monitor that. Aussie dollar and Kiwi dollar, they're so boring. Their last 2 months in a range, and the Aussie dollar and Kiwi dollar are like to trade this because it's so not just so boring. It's a little bit a lot of false breakouts. One day think, oh, the range is broken, and the next day just move again in the range. So this is why I'm out of the Aussie dollar and Kiwi dollar, and I watch only these major currencies. And the last thing, what I really like actually, is the bullish trend for the gold, and the gold really pushing higher. Even that we have a stronger US dollar, the gold pushing higher, and respect this trend line. The whole week we were bullish, and the only because we're almost on the high from the May 6th, and the next high that we maybe can reach is a high from the April, and that two levels I'm watching and reaction. One interesting reaction could be right now, because this May 6, May 7 high is exactly the high that we have right now. However, what I'm looking here is this US Open, because we retest early morning this high. Now we are testing again. So maybe if we reject this high, maybe gold can start to go down or maybe break this push. But we are on resistance. We are on some kind of the maybe I can say the weekly resistance right now. And the next move, we can just monitor and get some kind of ideas. So this is it. And the last thing that I just want to show is actually this is the my trade that I made yesterday in live session. I short a euro. I short the euro Aussie, and right now maybe active anymore because there is a some momentum upside. However, what I'm looking here is if maybe start to go again down, but it's a little bit tricky trade for me right now. The good thing is my setup actually was that that price can reach this blue line here because it's support, actually previous resistance from the June 6th, and maybe price can oscillate, can reach this destination here for Euro Aussie. We have a weaker Euro today, and maybe that can bring the price down. However, the Euro Aussie is so volatile, which I don't like. We reach in the early morning the ultimate high, for example, and this is not so good. So I don't know about this trade. Even if I continue this trade, I think that my risk will be very, very low because this is not my A setup. This is my maybe B setup because I do not respect the major trend. This is just some short time reversal. So this is it. I think this is the pairs that I monitor, and this is the things that that I want to share. So, are there any questions for the audience, guys? Do you have any question right now?
No, on my side, yeah. I mean, I'll go through my stuff as well, but I agree to a large question. Yeah, yeah, go for it.
Yeah, sorry about that. Yeah, I had my YouTube on in the background, yes, so I kept getting a double echo. So it's good now. I can finally hear you guys fine.
Nice.
This was the problem.
Rookie mistake.
Yes. Excellent. Yep. Excellent. I'm glad that you fixed that. No problem. No problem. So, Howard, you can share your screen if you want to analyze.
Absolutely. Let me just share my screen. 1 second.
Every Friday, I really like to hear the Howard, especially his weekly bias, just to catch that. Here you are.
You got it. Okay. Well, as always, I like to start things off with euro dollar. I'm still mega bullish on euro dollar. Obviously, my long-term wave count is that a major low formed in 2022. Using Elliott wave, we've had wave 1 up from the low, an ABC correction for wave 2, and this year to date so far we're rallying what I can see in an impulsive manner. So it looks to be that kind of early stages of wave 3, which should take us much higher. Zooming into more recent action, so we've had this kind of the swing high which got taken out this week. Previous swing high 115.734. We had that corrective 3.5-4 week pullback, finishing in the bull hammer a few weeks ago. Then obviously the break of that hammer high, that really kind of confirmed the low for me, and it's been up ever since until today. It's kind of going back over the week. As Igor, you mentioned, the key events, I guess, this week really, I suppose, with the CPI, I think was the key event that really kicked the thing off this week in terms of the euro going higher, the dollar going lower. and that was the weaker than expected consumer price index out of the States. And that really kind of confirmed the end of this kind of minor correction, bit of a double bottom on this kind of pullback. So we had this kind of ramp higher, and that really was kind of set the stage for that rally going into the previous yesterday's swing high, new multi-session, multi-year high kind of thing. So from my perspective, I had a bullish bias going in after the reversal on this day, where we had the formation of a bullish outside pattern on the daily chart. Let's just go back to the daily there. So that kind of, I went long on the formation of the bullish outsider on the daily on this day here. So going back a few days. So that was my long. I sat through the chop going into the CPI, and obviously when the CPI hits, then the market ramped higher, which was pretty good. I managed to. I also managed to go long on my system. One of my systems went long before the CPI and took profits when the CPI kicked off, and the other system went long just as the CPI move was coming in, and that held until the close of the other day. Let me just stop sharing and share my screen again. 1 second. Okay. So we should get the. Okay. So the first one was. So system-wise, yeah, as you know, Igor, I've got this kind of day trade system just for euro dollar that does a couple of things. One, it looks for a false breakout of the Asian session range. That's one thing it looks for. And another thing it looks for is the kind of stop hunting type move as we approach major support or resistance. And on Friday, not Friday, I'm sorry, 2 days ago, Wednesday, took a long position and then kind of made some money on the CPI as it came through. The previous 2 days were losers, but before that, there were 10 consecutive winning trades. So it kind of ended a series of 10 consecutive winning trades, these two losers. But yeah, CPI day, it made some money again. So as I say, I was long from this kind of point here where the market broke through the previous session's low and then broke back through the previous session's high. And that was my multi-day swing trade. So I took some profits as the market headed up through here. And also on my other system, which was a multi-day system, this is euro dollar again. So that one entered long just after the CPI on the break higher. So I started to cash in as the market was hitting these targets. So my final exit really was on yesterday's close up here. So it was quite timely in that respect that I managed to capture most of this move up and then exit. And then I come in this morning, and obviously the news came out of Iran, and people started taking profits on this. So I'm doing nothing at the moment on euro dollar like you, Igor, just really kind of standing on one to the sidelines for the time being. I still think we are bullish longer term. 1 second. Just go back to the.
Howard, your chart disappeared. Can you add again your chart?
Yeah, I was just going to go back to the trading platform, but yeah, did you want to see the systematic stuff again?
Yes, please. Just
sure thing. Okay, yeah, let's put it up. Okay, yeah. So this was the euro dollar one. This was CPI here. So I was long actually from this point the day before, and I held it through the chop, and then I went long on the intraday system here on that false breakout 2 days ago. So I kind of I was long on the system. I was long kind of on a discretionary trade here. And then as the market ramped up, I started taking profits at PT1, PT2. And then I've got this time exit that comes in and takes profits after a certain time in the trade. So I find it's quite good having a time-based exit because momentum is, it only goes so long. Does that make sense?
Yes.
So as well as having price targets, I like to have a time target as well. because eventually the markets will go the other way. So it's good to get out before the momentum can swing in the other direction, I would say.
And one question, Howard,
yeah,
just to connect this question, Andrew just asked a question, British pound dollar breaking 1.347 could see
yeah.
a larger correction. What do you think about this next correction for the British pound dollar, actually the next move for the US dollar? Can that be a larger correction or maybe not? What do you think about that?
I think we're in a kind of a dangerous spot actually at the moment, in that we have got that big, obviously you mentioned before, we got that rejection from the highs. So we've got this today, we've got this kind of long kind of red candle shaping up, which may have trapped people above the previous high. So yesterday's breakout through the previous high, maybe a similar thing to this.
Okay.
So we break through the previous swing high, new buyers come in, and then they get trapped on the next day. So it might be a case of we come back into the range. That for me is the risk at the moment. At the moment, that is the I'm still mega bullish longer term, but it might be a case of we go sideways to down for a few days, a few sessions. So
Okay.
I could see us coming back to 34.5. Yeah, that wouldn't surprise me really. But then I'd be looking to maybe buy it once we get down this. Got some big supports down here. So hopefully that answers that question. It just seems that after the push through the high, and then boom, that I guess the news related move to the downside today, so that we've kind of trapped a few buyers above the high. So there is the risk that we could come back down and see a bit of corrective action. But I don't think it damages the long-term trend. So again, just looking at the bigger picture for me, major low back in 2022, I believe, wave one, a second wave correction, and then all of this is part of wave three, I think. So we could just be doing some temporary chop. It likes to do that every so often. You get that big kind of move higher,
Yes.
and then you get a few weeks just kind of chop, and then boom again, chop, boom, and we're kind of chopping at the moment. So if we do see a bit more weakness, I don't think we go back too far. We've got the old high, 34.5 again, where the supports come in. So it might just be back down to kind of flush out some of the buyers before we go up again. So I guess a bit like you, Igor. I'm kind of I'm bullish long term, but I'm a little bit wary that there could be a deeper correction in the short term.
Yeah.
So I hope that makes sense.
Yeah. Yes.
Yeah, I would see that. I would
so
say
that's
so too.
Yep. Cool. Yeah, of course. If any questions at all, just interrupt me. If you've got a trade you want to put on, whatever you want to do, just interrupt me. That's no problem. So just move on to dollar yen. Let's just kind of just finish off some of these majors. So the yen has actually been kind of weak across the board of late, of recent. So new highs in euro dollar, new highs in sterling dollar cable. Not really seeing new lows in dollar yen because the yen crosses have been quite strong. And as I say, quite on a regular basis, when the stock market is rallying, the yen tends to weaken. There tends to be that carry trade thing where the well, I don't want to go into the details of the carry trade, but the yen typically weakens when the stock market is doing quite well for whatever reason. And that's really kind of that's kind of put dollar yen in a bit of a trading range at the moment. But for me, the big picture is still really bearish, dollar bear, in that I think we formed a major high, 161.95, and this is a rally that goes back to 2011. So that for me is the first wave down, which bases out pretty close to big support here. Then we see this ABC rally, so a 3-wave move, not a 5-wave move. 3-wave moves usually are against the trend. So there's the first leg down. That's the correction of it. And here we are breaking down in what appears to be perhaps the early stages of wave 3, which should take you through this low. So I think this is a topping pattern after a long bull market. So I think ultimately we break down. But in the short term, we're kind of stuck in this little range. Let's go on to the daily.
Yes.
So onto the daily. I guess if you might want to draw trend lines here and talk about triangles and maybe even head and shoulder reversal patterns and things like that, possibly. But certainly a consolidation here, which I think ultimately once we break, that'll give us a good directional move. I think it'll be to the downside, but we don't know until it happens, obviously. Yeah, it'll be quite interesting once we can break through these confines. I guess what, 145.5, and maybe this lower high 142.37 or so. I think once we can get either side of these two lines, then we'll see the big move. So that could be a good one once we get the breakout. So moving on to Aussie. So Aussie has not been very exciting, as you say, Igor.
Very boring.
The ranges have kind of dried up a little bit, but yeah, very boring. Yeah, not one I want to trade, really. I don't want to trade this one. But I think ultimately it's made a major low. It made a major low going back a few weeks when obviously the dollar really started to decline. We had the bad news on the initial bad news on the tariffs, which saw the dollar collapse, but also the Aussie and the Kiwi collapsed as well at the same time, which is quite unusual. But the subsequent week, we got this big bullish engulfing week. And that for me has confirmed a really important low for Aussie dollar. If you go back some time, you can see that it's really kind of a big buy zone in this region. It doesn't like it down there for too long. So it looks to me like a major low's in place for Aussie. We've got this broken resistance level here, so just above 64, the figure. So maybe there's if we come down, this is a big place to think about buying. I think should we get a bit of a pullback, but it looks like we're heading towards the top of this range for sure. That's really what it looks like to me. Kiwi is always typically very similar. So Kiwi dollar on the weekly, again, that same kind of idea where we've got that big level going back to 2020, and there's big support there. And again, there's this double bottom type thing here. So big support in this region, and we broke through it through resistance, minor pullback, and we're trying to break higher. So it looks to be a little bit strong for Kiwi dollar, but I don't really want to trade it. I think if you're going to trade this stuff, if you're going to trade Kiwi dollar, Aussie dollar, I think you want to be holding it for a few weeks, really kind of a multi-week swing trade rather than trying to grab 20 or 30 pips kind of thing. Onto CAD. So dollar CAD, in that the high that we saw early in the year was pretty much a major resistance area up here, major resistance. So that is kind of the expensive zone, and I think we're kind of trending down in the early stages of a kind of a bear market for dollar Canada. And interestingly enough, we've got a lot of people trapped above this line. 138.80 or so. A lot of people trapped above this line, and the bounce here failed to really get back above that line, and we're heading down. So I think selling dollars on bounces against the Canadian. So that's kind of the currencies for now. I'll tell you what, I'll hand it over to you guys, maybe Tiger, and then come back on the other stuff a bit later. Yeah.
Yep, sounds good.
Unless there's any questions on
Tiger, here you are.
Go for it.
Okay, I just hit the present button. Is that right?
Got it.
Yes.
Share screen. Okay. Let's do that one there. Hold on one second. Let me just select the right one. Is that working for you? Okay,
here
perfect.
All good, looking good.
Perfect.
Excellent.
Okay. Yeah. So yeah, that that little bit of fireworks we had last night definitely kind of stopped me in my tracks on some of the trades I was looking at. I did realize that the dollar was really the only currency that I saw as far as the index and the futures that got a little bit of a bounce. Everything else kind of dropped. So, this morning, I mean, coming into my fundamentals, the first thing I always look at from a 30,000 foot view is the fundamentals. So I like to look at the recent reports as a collection to see how they've performed per each currency and even some of these other instruments I trade. So currently right now, and I don't know how I can, I guess it won't let me share, but just the one screen, huh? Just trying to figure out how to share. Oh, here we go. Share this tab instead. Okay. I'm learning on the fly, guys. I'm sorry.
No worries.
So, yeah, just looking at all the economic reports, this is a surprise meter right here. So this is one of the first things I like to look at each day. Basically all it is just a collection of your GDP reports, the CPI, the PPI, all the main fundamental reports. And this is a surprise meter, meaning whatever the economists are projecting for that particular report, if it's above expectation, it'll give it a positive rating. If it's below expectation, it'll give it a more negative rating for potential shorts. So when I look at all the reports, currently the British pound, the New Zealand dollar, and the Canada dollar, as you can see, they're the higher percentages. So 71% of the reports for the pound have been positive, have beat expectations. Okay, 88% for New Zealand, 83% for Canada. And really the only negative one we have right now is the Swiss franc at 40%. Okay, 50 is basically the baseline, if you will. So yeah, just looking at that, I mean, that's the three main currencies I want to try to match with a weaker currency. So when I flip on over here to my top setups page, now this is something that I've been searching for 10 years is a way to kind of collectively put all the reports into a one pager to show me what's looking good and for longs, what's looking good for shorts. So currently, if I'm looking at this, I mean, my top setups are basically selling the Japanese yen and then buying whatever the other currency. So Canada yen, CAD Jap right now, New Zealand Jap, Euro dollar, Swiss Jap, Euro Jap. That's some of my top pairs right there because as you can see, I mean, the COT reports, okay, the commitment of traders favored the first currency. Retail position, the retail traders observe the masses do the opposite, right? I get a point for that for these particular pairs. Seasonality, trend, and then we start getting into the economic data. And basically, if it's a positive report, it'll give a 1 or a 2 for a score. So basically, long story short, this kind of adds everything up and gives you a final score and then a bias, very bullish, neutral, whatever. So first thing I do in the morning, I just get rid of the neutrals because I only want actionable items. Okay, so again, right now it looks like we're looking to sell the Japanese yen, okay, buy the other pairs, and then the British pound, the Canada dollar, and then what was the other one? It was the British pound, New Zealand dollar, Canada dollar. So that's the pairs I'm looking to buy. So yeah, very top, Canada, Japanese yen. This is my 30,000 foot view. Okay, again, I want to find out fundamentally and sentimentally what the big banks and institutions are buying. After I have a why, that's where I use my charts to go in time to entry. So I personally like to use the daily and the 4 hour because it's just less noise. It's where the institutions are playing. But yeah, if I don't see anything, then I'll just kind of drill down into the hour charts, the 30, the 15, so on and so forth. So yeah, so that first one, Canada, Japanese yen, that's obviously the first pair that I want to look at for a potential long. So let me just go flip back over here. I keep forgetting I gotta share my individual tabs. Yeah, so Canada Jap, I mean, swing low to swing high on my Fibonacci. This is my daily on the right and my 4 hour on the left. So again, I want to look at everything from the top down. So yeah, I mean, you can see right over here on the left, if I flip that over to a 2 hour, I believe that was yeah. So I had a 2 hour demand zone right here. okay, just below the 38.2 retracement. So that was a good entry point. Now, again, I didn't jump into this trade because of all the chaos going on in the Middle East, but yeah, I mean, even so, that would have been a good bounce. I'm looking for unfilled orders. Okay, I want unfilled orders to buy low and sell high, or vice versa if I'm shorting. So yeah, just looking at the Canada dollar, Japanese yen on a 2-hour time frame. I mean, that was my last down candle before a big move up. So chances are there's unfilled orders. And sure enough, when price came down, it bounced through it. It did wick through it, but look, the buyers took control and pushed price up. I mean, that would have been a great trade. But again, whenever there's hot news events going on, it's just best to be careful. So I just avoided that. But even so, I mean, it was still a good trade. So, so yeah, that's Canada. Now I can always take, obviously look at it on a smaller time frame too, which I know this is more of a smaller time frame channel. So just looking at this swing low, okay, and this swing high, I mean, we can go look and drill down and find a demand zone to potentially buy. I'm going to get rid of all my drawings so it's not so noisy. But yeah, so I've got the order block tool on TradingView. I love it. I mean, I spent a decade plotting out my own supply and demand zones just manually. But when I found this tool, I thought, my gosh, this saves a lot of time, because you can go to any time frame and it'll draw a box around those demand and supply zones as they accumulate. See, so there's one down here, and supply and demand is powerful, super powerful. I mean, that's really the building blocks of trading, is finding those unfilled orders and and utilizing them to push price the opposite direction. So, but yeah, I mean, if we drill down, so again, we're at 1 hour, we got a demand zone forming down here. So I like zones like this, because when it leaves the zone, this one in particular has a pretty decent fair value gap coming out of it. It's not anything too strong, but it's strong enough to where I'd be happy to, put a rectangle around that one on a smaller time frame, color that green, and yeah, just look to. It got close to touching. I don't think it quite touched it. Pretty close, but I try to avoid zones that have been mitigated or been touched. Because if a zone's already been touched,
yeah,
the chances are, a lot of those unfilled orders have already been taken. So, yeah, if I'm just looking at Canada Jap, I mean, yeah, I'd be happy to see something kind of like this. I mean, if price comes down and bounces in my zone, I can go buy to the upside like that. So that's just the example for Canada Japanese yen. If we flip on over to the New Zealand yen, it might look pretty well the same. Yeah, daily on the right. Start with the 4 hour. I'm sorry about that. Daily on the right, 4 hour on the left. Just get this reset for me real quick. Yeah, swing low, swing high. Got my Fibonacci, and as you can see, price actually bounced right off the 61.8. Now these blue and orange boxes that you see here, that's another tool I use called the master pattern. It's really a variant of accumulation and distribution. We've all heard the accumulation and distribution model and market structure. So this is just kind of an actionable way of using it. But basically, when you see a blue box, and this is another indicator that comes for free on TradingView. But yeah, anytime you see a blue box like right here, it's basically a contraction point. It's where buyers and sellers agreed upon price for that period of time. The big banks push price out, like this example here, to test the liquidity on that side. They turn around and push price down below that fair value to test liquidity on this side. And then at some point, it trend. So when I look at the master pattern, I love to use that in conjunction with supply and demand, because anytime you buy under value, you're buying low. Anytime you sell above value, you're selling high. So I love using the master pattern in conjunction with supply and demand. It's just awesome. But yeah, you can see right here that there's a fair value line that sprouts out, that solid blue line. And as you can see last night, I mean, price bounced right off of it, just like it would a demand zone, and is currently pushing up. So that's what I love about that. You can kind of use it for places to buy and sell. You can use supply and demand. I prefer supply and demand, but just knowing that I'm buying in a demand zone under value when it comes to the master pattern, that increases my grade. I mean, I don't want to say grade A just from that, but I like to use VWAP as well, volume profile, spikes, that kind of thing. I try to talk myself out of placing a trade more than I try to talk myself into it, because when we talk ourselves into a trade, we shoot ourselves in the foot, right? So put as many variables as you can in your favor and let her fly. But yeah, I mean, outside of that, I do have a price point further down on this 4-hour zone. So kind of like what I drew over here the other day. If I could get something like this, just have price come down, catch these unfilled orders down here, and catch that to the upside. So that's kind of and I've got an alert set there, but that's what I'm looking for, the New Zealand Jap. Euro Jap, Swiss Jap, same thing. I mean, again, I'm looking to sell the Jap because that seems to be the hot ticket according to my top setups page right now. And then, of course,
do you look at the stock market? Do you look at the stock market or the other markets at all, or
oh yes,
as part of the input for the currencies, or not so much?
Yes. Yeah, absolutely. Because I mean, I also trade the CFDs, for the S&P, the NASDAQ. So yeah, really the first thing I like to do is just come in and take a look at the Dixie and all the other dollar, currency indexes. I mean, again, if I'm just looking from when we started hearing all the craziness come out of the Middle East, yeah, the dollar was really the only thing that spiked up. Everything else, the euro, the British pound, the Swissy, everything else dropped, as you can see. So I like to see that on the indexes. I also like to jump down to the currency futures, same thing. I just want to see how they're behaving. Dollar up, obviously, euro down, everything else down but the dollar. So yeah, it's good to know just basically where the money's flowing at the moment. So then, of course, I like to touch on the VIX and just see what the overall volatility is looking like. I mean, after we started hearing about the strikes last night, you can see the VIX just spiked upward like crazy. Now it's since kind of retraced half of it, but yeah, where's the volatility? Where's the money flow going? I mean, those are things I like to look at. And then, yeah, I jump down to the S&P, the NASDAQ, the Dow as well. So, yeah, because I mean, if we're in a risk on atmosphere, then yeah, we'll look to, maybe add in some Bitcoin, risk off, add in some gold. I mean, there's just one big giant puzzle, right? And every day is different. So, but yeah, definitely want to know the overall direction of the indices for sure.
Yeah, good. Yeah, just interesting. If you're looking from a sort of a fundamental perspective on currencies, just thought there might be some intermarket relationships that you look at as well.
Oh yeah, so, it's just crazy how big it's just all one giant puzzle. I mean, I spent the first 5-6 years just strictly on Forex, but yeah, like I said, as I started getting into the fundamentals and the sentiment, then you start to realize the whole entire thing is just one big puzzle. It's all connected.
Oh yeah,
yeah, it's pretty crazy.
Yes, sure, guys. I want to create one trade, if I can just to share my screen to show you what I'm looking for. So I would like to sell Euro Aussie just to try, because like I said, might be set up, nothing special, but just to okay, just not this screen, the platform. So it's not smart to trade during the Fridays, but sometimes it's okay to try. So I will this will be a low risk trade.
You said Euro Aussie?
Yes, Euro Aussie. I'm selling right now. What I will do, I will put my stop high of the today's high, and I will take profit around the previous resistance, now support. It's almost 1 to 1.5 risk reward ratio. Nothing special, but I need to put a little highly volatile currency, and I need to protect myself of the crazy volatility spikes. So I will just show you again what is the idea of this trade. So what's happened here? We have a strong, very, very strong bearish divergence here. I will just share my trading view chart right now. So as you can see, we have a very, very bearish on oscillator move. We have a higher high on the and interesting is now that we are very close to the 50 relative strength index, which means that usually in this moment, if price reach 50, then accelerate. And I hope and I think that in next couple hours we will accelerate, push downside. Actually, if you look a little bit, we think that this on different side. Of course, I know that usually we have a news that will make a spike, but it's not something that will shift the movement of the market that market wants to go. So I think that we can reach the previous resistance, now support. As we can see, 76, we oscillate beginning of the June and end of the May a lot. This is the very, very, very strong area, and the momentum is when we look the chart, it looks like a bullish, but I think that euro and British pound is weaker and weaker on the end of this day, and I hope that that we maybe can see this push downside. But I don't like to trade crosses a lot. This is one of the rare trades that I make, because I know that Euro Aussie, then British pound Aussie, British pound Kiwi, all that pairs, there are so many false breakouts, so many false divergence, so many problems. And I remember 10 years ago when I trade a lot crosses, I had very, very poor results. And I said myself, do not trade anymore. And I stopped to trade them. And now very, very occasionally, and if I do that, I reduce my risk size, because it's really, really hard sometimes to trade these Forex pairs. Guys, what are your experience with Euro, Aussie, British pound, dollar, Kiwi, and this currency pairs?
Yeah, on my side,
do you have a problem with this?
Yeah, on my side, I never really do much with Euro Aussie. I don't really touch the crosses that I trade are really like yen crosses. I try and avoid even Euro pound and Euro Swiss. So anything that's not straight dollar, it's really kind of yen cross for me. How about you, Tiger? How are you? I know you like some of the yen crosses as well.
Yeah, I mean, honestly, the thing that really dictates whether or not I'm going to trade any currency pair is really, it all boils down to ATR, average true range. I mean, as long as it's something that's given me 80, 90, 100 pips a day volatility, that's really the main thing I look at. I could care less if it's a major or minor. I mean, I stay away from exotics, but yeah, I mean, I've traded a lot of yen pairs, like New Zealand yen, pound yen, Aussie yen. So, and I've had some success with them. Yeah, I'm not really that picky, to be honest. It's just as long as it's not something small, like something that's 50 50 pips movement or less. I mean, I stay away from that. I need stuff with gusto, something with some gasoline behind it.
That makes sense. That makes sense.
Yes.
I was going to say, I'm getting close to sorry, Igor. I'm getting quite close to a sell entry in Bitcoin. If I just quickly show my screen, I've got something I'm working on there.
Please share your screen. Please share your screen.
Bitcoin.
Yeah, let's have a look. There we go.
Yeah, and I believe Bitcoin has given me a bullish bias too.
Okay. So this is the intraday chart. Obviously, we had the big breakdown, double top, quite aggressive selling, obviously on the news. We've had the kind of rebound, but we are struggling at broken support here and here. So these kind of pushes higher today on this rebound are really struggling in this zone here. So I'm about to go short, I think, any second now with a stop just above the recovery high. That's it, really. Looking for a retest of the lows. So hopefully any second now we should see a bit of a move down.
Go, go, go.
Nice trade. I like it.
Okay, looks like my camera's disappeared for a second. Hang on, let's see if we can get it back.
Oh, he lost his camera. Yeah, well, yeah, I mean, I'll just go ahead and say, I mean, I'm taking a look at the euro dollar myself. While he's coming back up, I'll just share my screen real quick here.
No problem. Oh, Howard is back.
Oh, okay. There we go.
Oh, here we go.
Yeah.
Okay.
We see you, Howard.
There we go. We're back in the game. Yeah, we're in the trade now. So a corrective bounce into broker close by the end of the day. See if we make it or we don't. So back to you guys.
Okay. Do you want to share your screen, Tiger?
Yeah, absolutely. I'll let me just present, share screen. It shows me all the tips, of course. Euro dollar. I mean, that's one that I'm taking a look at the moment. If I just go back to my euro dollar. So yeah, I mean, it's bounced pretty nicely off of this 4-hour demand zone this morning and early this morning. And I mean, I've been kind of watching this one because I put my VWAP line at the bottom at this swing low, if you will. And it's been kind of trailing up, kind of like a moving average. And yeah, the last 4-hour down candle actually pierced through it, pierced into my demand zone, and has actually closed a little higher than 50% of that candle, right? That's the 4-hour. So just taking a look at the subsequent candles, I mean, I had a 30-minute candle. I had some good, I've had some good movement out of that. I had a nice engulfing candle, the previous 30-minute candle right here, off of that last down candle. I have verified that with my edge finder. Okay, euro dollar is showing as a bullish setup up here. So that's helping my narrative right there. So because of that, yeah, I mean, if I flip back over to my screen here, I mean, we're looking at a good spot to potentially buy right there. It's kind of dipped below the 38.2 retracement level, and actually it's bounced off the 50%. So here's what we got. I mean, we got a former resistance point over here to the left. Okay, resistance often becomes support, so that's going into the demand zone as well. So I got a lot of variables. So I'm just going to flip on over and just jump into this trade. Now it's a little higher up than I prefer. Okay, so yeah, I'm basically just going to kind of push my take profit a little further out. This will be more of a longer term type trade. Just take a look all the way to the left and see if I'm running into any supply zones, overhead supply zones. Okay, this is my daily. So yeah, I'm just going to take a quick peek over here. Okay, so we've obviously got a swing high point up here. So yeah, I'm just basically going to put my take profit right around this area. I don't want to put it up in this area because, you know, that there could be some hidden supply zones in there, obviously resistance points. So yeah, I mean, I'm just going to go over here and we'll just take a stab at the euro dollar and get that set real quick. Back down to the 30-minute. Yeah, so I'm going to put my stop loss below the 61 level of this Fibonacci. And I've also, again, I've got this, if I look at that on the 4-hour or daily, I'm sorry. Yeah, all the way over here, I had a resistance point. Okay, so I just put my dash line over there, and it's going right on that 61.8. So yeah, I'm just going to pull the trigger on this. We'll see what happens. Get a little euro dollar action going, and I'll be okay holding it over the weekend. I mean, like I said, I typically trade on the higher time frames, so I'm not too worried about, you know, the fact that, I mean, who knows, right? This war stuff going on could really play with it, but we'll give her a stab. I'm only betting 0.2% of my account. Okay, tiny trade, tiny risk. I'm not going to be betting no 1%, 2% on something like this, but it's just putting some skin in the game. I haven't really placed any trades this week, and we'll just see how this goes over the weekend. We shall see how it goes. So yeah, that's all I got on that one. Anybody else got anything? Yeah, that's all I had for that.
And what are your stop loss and target?
Yeah, so if I flip back on over here, so I put a Fibonacci from this swing low to this swing high. So the 61.8 level actually goes right through here. Okay, so that 61.8 level is also a former resistance point if I go further back in time. Okay, all the way to here. So I just put a dash line there. That goes right through that 61.8 level. I've got my demand zone on a 4-hour time frame. So I just typically put my stop loss a few pips below. But in this case, I just want to make it a little more wide to take in effect that 61.8 level and that former resistance point. And because the craziness going on across, you know, over, you know, in the Middle East, I just want to give it a little more wiggle room. So this is only a $500 risk on a 250K account. Okay, it's just getting me in the game. I feel pretty good about it because of the fundamentals, the sentiment, and then these technical pieces. So yeah, I'm much like you guys. I don't normally like to place trades on a Friday either, but it looks good. I mean, all the pieces have come together for this, so I'm just going to go ahead and put it on, and we'll see how it goes.
And tell me, what is your target for this trade?
Well, I typically like to do it absolute bare minimum 2-to-1, but 3-to-1s, 4-to-1s. I kind of utilize a trailing stop. I mean, if it hits my 2-to-1, 3-to-1, I don't just close it out. I'll just slowly start trailing my stop up. Once this thing gets to like a 1-to-1 or a 1-to-1.5, then I'll automatically move my stop loss up to break even or enough to buy a cup of coffee, as they say, right? That way I've got a free trade. Okay, so just give me a 1-to-1, a simple 1-to-1, and that way I'll just let her fly because it takes all the stress off. And yeah, you know, it may come down and tap you out for a tiny win, and then it may turn around and fly up. But I don't know. For me personally, I've just had more success doing that. just take the stress out of it as soon as you can with that 1-to-1, and just let it run and just trail stop along the way above all the swing lows as they present themselves.
Yes, nice, nice. So
makes sense.
are you ready to keep this trade maybe till Monday, Tuesday, or you plan to close at the end of the day? What is your plan for this long buy euro dollar?
Yeah. So, I mean, I'll take a look at it about 30, 45 minutes before the end of the day, the currency day. And, I mean, if it's, it all just depends. I mean, again, I've given this, because this is the reality with this only being about a 50 pips away from the potential stop loss. I mean, I may close it. I'm just basically going to monitor the events overseas for the rest of the day. If stuff starts getting too crazy, they keep bombing more and more people, I may just close it out. But this way, I'll at least give it a chance to see if I can get a nice spike upward today. If it just goes sideways all day, yeah, I may just get out of it. But this way, it just gives me some skin in the game. It might make a big spike up, or it may just drop and close me out for a real small loss. But yeah, if it just goes straight sideways from where it's at now, I may just go ahead and close it out. Because here's the thing: if I'm buying in a demand zone, I want that trade to immediately go in my direction, because all those unfilled orders theoretically should push price up fairly quick. So if it's just going to dilly-dally all day, then it wasn't that strong of a zone to begin with. So I may just close it out at the end of the day. So yeah, we'll just see how this next 4 or 5 hours goes in the trading day. And yeah, if it's going sideways, I'll just cut it. I'll just, cut it out for break even or whatever the case is. And if I get a nice 40, 50, 60 pip spike upward, then I may just let her run. Time will tell.
Interesting. Go. Yeah. Hope you get your move into the close. That'd be cool.
Yeah.
Yeah. Just out of interest, any of you guys been looking at crude oil last couple of days?
Oh my gosh. Yeah.
There's one. That's one that moved.
Yeah.
Let me just show you my screen. I was trying to buy it on the live session yesterday, but I missed it by a fraction. I got to stop
screen. I'm sorry.
Here we go. No worries. Yes. Let me just whack that up there.
Yeah, nice spike, and I think it's recovered somewhat, hasn't it?
Yeah. Yeah, this is the intraday chart.
Yeah.
So so yesterday on the live session, I kind of anticipated. I saw this low, and then I was trying to get the pullback, but I never quite got to where I wanted to get. That was unfortunate. I didn't know what was going to happen overnight, obviously, but to me, it was a bullish setup, a correction within a bull market. Pulled back, just basing above the previous swing high, the buyers coming in, kind of thing. So that was kind of the idea, and obviously we got the acceleration higher overnight. Big picture, though, obviously. I've been following this descending triangle for some time, which is on the weekly chart. So you had that kind of, that's the kind of invasion, Ukraine, double top, and then down we go. And then from kind of early middle of 2023, stuck in a range, but obviously with lower highs along the way, and then basing up big support here, up we go, and then eventually it broke. So you had that kind of big break to the downside, which was obviously quite bearish. So rebound, failed at broken support, another go at the low, rebound, and now here we are settling above the old level. So I kind of went bullish. Really, I was bearish, I think, until just trying to squeeze into that on the daily chart. So at this point, I was kind of looking to have a crack at it for the move down, but it failed on this day here. So failure back in intraday after the sideways. But I think on balance, it seems to be quite supportive, really. So watch out for the higher petrol prices, guys. So that's that one. Just looking at Bitcoin. Yeah, so here's the intraday chart of Bitcoin. Can you all hear me okay? All good? Can you hear me?
There is small interruption
Okay, guys.
when I listen to you.
Excellent. Okay. Yeah. So here's the Bitcoin trade. So so basically short, as I said before, just looking for this thing to top out and then have a crack at the lows. So could be something for later on during the US session. Okay. Back to you guys.
Yeah. Yeah. I mean, I'll let you sell it down to my demand zone so I can buy it.
That sounds good to me.
Yeah. We'll just play some ping pong. Yeah. I mean, get back around 100,000. I may jump back into that thing to the long side. I mean, obviously you got your psychological numbers. I'm sure you'd be watching it for take profit potential, on your short sell. So, yeah, I'd come back down to that swing.
It's really, for me.
What's that?
Yeah. No, that's it. For me, it's the retest of the low. I'm happy with that if we get it.
Yeah. You can just hand it off to me because I'll probably be looking to buy because, I mean, if I look at Bitcoin, that's dropping right down into a 4-hour demand zone for me. So basically between 102,000 and 100,000. Not the greatest fair value gap coming out of that zone, but yeah, I mean, I'm sure there's going to be some unfilled orders and clearly around the 100,000 level, people are going to be wanting to jump back in. So between the big banks and the retail traders, I think that'd be a good spot to jump back into on the long side. Oh, show.
Okay. Igor.
Okay, guys, I got a question. I got the comment. Yes. What are the institutional traders doing? Sorry, I was late in here. So I don't know exactly what they're doing right now, but I just watched the COT report a few days ago, and I see that they are still keep euro and British pound dollar long, and they're pushing prices for euro dollar in British pound dollar long. Of course, what I'm looking right now is I wait for the report for the beginning of June, because the institutional traders like to do rebalancing their portfolios in the beginning of the month. And that report is very important for myself. So what I'm trying to do right now is I'm just waiting to see the first if they want to change the shift. For example, they want to sell euro and British pound. We will wait a couple weeks to see on the chart that, because they're usually is so slow. That moves that institutional traders are doing is so slow. So we need to wait sometimes a lot of time to see anything on the chart. However, what I just said in the beginning of the session is that the US dollar index touched very, very important low, was in last 10 years several times important support and resistance zone. So this US dollar level that we are right now can be volatile, can be interesting, can push upside or downside. So anything can happen right now because we are there. We are on the big institutional level. And on the same time, we are on the highest high of the euro dollar and very close to the highest high of the British pound dollar in the last 5 years. So we are on the important price institutional levels right now, and price can go in any direction. And we just need to see where we'll go. And sometimes can be false. So it's so hard. Related to the for example, today euro dollar and British pound dollar, we just share my screen. What is the interesting here? I will just give you one interpretation what I usually see on Friday. So for me, the Friday is very tough to trade because we're never going to the lower high. We usually finish the day somewhere between. You can see a lot of doji daily candles on Fridays for a lot of assets, and this is something that I watch, and I think that this is one probable scenario. Sorry, Tiger, for that, because you have a good buy euro dollar trade, but I feel just this is intuition, nothing special, that we will just be nowhere on the end of the day. I think that we will not try to pick the high again, neither that we will create some new low. I think that we will be somewhere in the middle. So what is the maybe one of the projections? Very soon we will hit the high. That high can be, for example, the high from the several hours before during the euro session, and then we will continue maybe down or sideways. So this is something that I expect for the euro dollar, and this is something that I expect for the British pound dollar. And if British pound dollar just touch the simple movement, I will not be surprised, because on Fridays it's really choppy market, sideways, something in the middle, never true. That I like to see, with some big trends, with some to be somewhere. And this is that I watch right now. So why my possible scenarios is that we will maybe retest this previous trend line and start to go down, or to retest the simple moving average and start to go down or something, because when you break the line, and then usually you can retest and continue down, or maybe you can retest and be sideways. But usually I don't see that we have a power that to the end of this day again push higher and higher. So this is the something that I think. For example, I would like maybe more to sell right now, for example, British pound dollar against the simple moving average 50. So I will put my stop loss just above simple moving average, and I will target again this today's low, maybe lower. So I feel that the market just goes sideways, or just push downside, because this news event that we got early morning, this was really huge. I know that it's nothing that fundamentally changed euro dollar, British pound dollar, and etc. But usually a little bit mess the whole situation. So in today, I'm a little more bearish for euro dollar and British pound dollar than I'm bullish. This is the only thing. But it's a really 50% to flip the coin, and just we can play with probabilities, nothing more. So this is for me. Sorry, Tiger, because I'm on a different side. So I hope that your trade will be good.
Hey, the beauty is that's what makes a market, right?
It does.
It's the buyers and sellers. I mean, I'm looking at more of a higher time frame, and I'm okay with having a little bit deeper of a retrace, so to speak, which would be good for your narrative. And then just like Howard's narrative on the Bitcoin, sell it, drop it into my demand zone, and I'll take it off your hands. That's what makes a market. That's the beauty of it.
and as you say, different time frames as well. That's the thing. We can all be right.
Yeah, exactly. Yeah.
I just wonder what's happened. I just wonder what will happen with gold, because we were on resistance today, and last 1 hour we are starting to go down a little bit. So as you can see, this was the highest point today for the gold. We tried to, in the Asia session, hit the high, went down, hit the high, the same level, and now we are pushing down. So this can be very interesting. Maybe this can be the end of this bullish trend, but we can know that only if we break the support levels or something. So the gold is interesting. Another idea where I maybe can try to go as contrarian trade against the major trend, just because just because this unsuccessful retesting.
Yeah,
What do you guys think about gold right now?
Yeah, I agree. I mean, it's just about to bounce right into a couple 2-hour supply zones. So, theoretically, there would be some unfilled orders up there. So, yeah, I mean, definitely, counter trend, but I could definitely see a spike back downwards. I mean, maybe, drop it back to the 33.60 level or something like that. But yeah, I definitely wouldn't be buying up there at the moment because I mean, I would want to see it push through some of those highs, maybe close on the other end, or just turn around and come back down a little deeper to retrace and jump in on a demand zone.
Yeah, I don't know. I look at it and I think I want to buy it.
Yeah,
but I'm in Bitcoin, so I can't do it. I'm not going to do them both. Yeah.
Yep. FOMO, it's real.
No. You can't keep double up, triple up. Not good.
Yeah. Well, I mean, I'm kind of that way with just currencies in general. I mean, if I'm I got 4 different Japanese yen crosses going on right now. I'll just pick one of them. I mean, I don't like to push my risk out amongst 2 or 3 currency pairs of the same. Some people do it. I follow some people that do that, and they just kind of leg in on a few different on the same currency, but on a few different pairs. I don't know. I just don't like to double, triple up my risk. So,
Tiger, can you tell me what is the name of this platform where you analyze the prices and everything and get that insights related to uncut reports and sentiment and everything that you showed in the beginning?
Yeah, if you want, I'll just share my screen again real quick. I don't know how much time we have, but
yes, please.
Yeah, let me just share screen real quick. Edge Finder, there we go. Yeah, so this is a1trading.com. Excuse me, is the website you go to. Up here at the top right, a1trading.com. The name of the tool is called the Edge Finder. So it's some guys out of Atlanta, Georgia, some coders. They've went and they've created this thing. You purchase the software, but yeah, basically, I mean, over here on the top, the left, it shows you can look at the top setups in a few different ways. The top setups page, obviously, it shows everything by sentiment, technical, economic. You can drop it down to show just the economic top setups only. You can show it by sentiment only. So the institutional buyers, the retail buyers. But yeah, I mean, I just use and if you want to really drill down into all the different reports, like, the COT report, I mean, it's on here. I absolutely love this tool because it'll show you all the, what the big banks and institutions bought the week before. So obviously here in another 4 or 5 hours, we'll get the updated COT report. So, but yeah, I mean, it just shows the net change. This is the only spot I care about right here. As a trader, as an intraday trader, this is what I care about. For more position, long-term traders, they care about this up here. Okay, the big banks are long the yen as an example. They're short the Canada dollar when we're looking at the overall positioning. But week to week, it shows the percentage up or percentage down, that they went net long, net short. So, and then you start going down, you can look at the market sentiment. Okay, the put to call ratio. This tool is really, really cool. If you start getting the line right now, seems to be a little more neutral, but this is a really good indicator, the put to call ratio for the options market. I mean, if you start getting above the extreme fear, that's where everybody thinks the market's going to zero. So that's just a good contrarian indicator to look to find a buy signal, and vice versa if it dips below the greed. So you can look to sell. So, but yeah, just basically all the reports, the economic growth data, the GDP, labor market data, inflation data, interest rate data, housing data. I mean, this thing puts everything. It's just basically you got to be a super big nerd to like this, and I do. And I think my girlfriend gets jealous. But yeah, it just puts all I care about is that top setups page. I mean, I like to drill down into some of the data, but it's just a real quick way of seeing, do I have a bullish bias? Do I have a bearish bias? And then I just take that data and go time a trade on the chart. But yeah, a1trading.com for anybody that might be interested in that. It shaves about 2 hours out of my mornings rather than having to go to Forex Factory and all the different, barchart.com to see all the information that's on this. This puts it all into a one pager, and then I can look and say, okay, I'm supposed to buy that. Okay, I'm supposed to sell that. If I see a chart.
How long would you say these kind of indications last for? Are they like weeks or days?
It's a very, very dynamic list. I mean, as soon as we get a an update on one of the reports, like today at 9:00, just an example, we had the UOM report come out. Okay. As soon as the report is released, they typically have it updated on there within like 30 minutes to an hour. So yeah, I mean, that top setups page, it's constantly, it's constantly moving the score. So I love it. I love it because I don't have to think about it anymore. I can just look, get a quick score. But
okay, I just want to say, all listeners right now that you watch the session, please, if you have some setup that we can analyze or anything to ask, please, you can ask. We are here a few more minutes, so please, you can share any thought or any setup that you prepare for the next week. And I just want to ask you guys, what do you think about the indices, the NASDAQ and other things? Let me just share my screen just to show what's happened here. For example, we have a really, really good drop, I think, because of the new early morning. But what is your bias related to the next week, related to the NASDAQ, S&P 500, and Dow?
Yeah, bullish. I mean, kind of in the middle. I mean, I don't want to go out and buy any of them right now. I need to see some pullbacks, because we are at the, actually, let me go. Yeah, I mean, according to my screener, I mean, it's bullish for all of them. But yeah, we are currently at some highs. Hold on a second. Yeah, it's just kind of slowly grinding up. I mean, we got some overhead supply zones, for the NASDAQ, for the S&P, for the Dow. But yeah, I mean, if I can get some retracements, I may look to get in, but yeah, pretty much positive, bullish.
Yeah, same here. Does look still look pretty good. Yeah, today looks like a bullish hammer might be forming on the S&P. Yeah, we close up at the top end of the range. We got another bullish hammer.
I just want. I usually, when we have these kind of situations, when we have a news, then we have a down market and everything. What I see in Monday is this. Usually, first the NASDAQ start to recover, be positive. The Dow and S&P are around zero or bearish, and in one moment, all three start to go bullish. So I think that NASDAQ is usually the leading indicator because of the, I think, good stocks, 100 good stocks that they have, and I think that I would like to see recovery during the next week. And there is one question before the end of the session from the James. James wants analysis for US dollar Swiss franc. I will just give you my opinion, and then Howard, if you want to share your opinion.
Sure.
I'm bearish for US dollar Swiss. Actually, what I'm seeing right now, for example, on the chart, is maybe perfect situation to sell, because the US dollar is weak, almost the whole week is weak, and I think that the Swiss franc is a little bit stronger, so everything aligns there. Moving average 50, reject, and maybe start to go down again. This can be interesting trade, maybe some scalp or some short time trade for today, for example, like Howard created the Bitcoin sell off. This pattern is very similar to that. You have a strong bullish attempt, reach the resistance, rejection, retesting, and now again going down. So I'm about intraday US dollar Swiss.
Yeah. Yeah, for me, let's just quickly present it for, as we've got a little bit of time, I think, almost 1 second. Okay, just quickly on the daily charts, obviously a bit of a base ahead of the swing low on the news, obviously, but we've got a lot of broken support above the market. So anywhere in that 81.50, maybe up to 82, perhaps, somewhere in that region, I think is a sell for the next leg down. So it may be today, it may be Monday, I don't know, but there's a lot of overhead supply, and it looks to be very negative. You've got a lovely A, B, C rally from the low, which tells you which way the trend is as well. So A, B, C, 3 waves. So 3 waves up is negative. So yeah, that's me.
Yeah, 81.55. Yeah, somewhere in that area. Get that supply and just drop her down. I mean, it's overall, if you look at it from a much bigger time frame, I mean, it's currently sitting in a weekly, a weekly demand. So overall, right? So, the higher you go, the stronger it is, right? So, yeah, me personally, I would just kind of sit back and wait. I mean, if it's hitting demand on a higher time frame on a weekly, then yeah, it could potentially push price up. So yeah, it'd be interesting to see how it chews through these through the demand zone on the higher time frame, because it's currently sitting right in a daily demand zone, right? So yeah, just kind of sit and wait, see how it reacts to the higher time frame.
Yes.
zones.
And just to answer to the Robert, he said it's probably a good time to go short if everyone else is going long. So it's a different charts, On the intraday, I'm bearish. On the daily, I can be something else. On 4 hours, something else. It's changing all the time. It's important to find an edge for that time frame, and of course, create some idea, scenario, and try to execute. So I hope that will be like that. And we are almost the end of the session. Actually, we are two minutes above that. So the next time we can discuss about all these setups, guys. Please join to the next group of coaches, and you can ask the questions. And of course, you can see us on the next week too. I wish you a really great day today and a great weekend. Howard, I wish you the great weekend. Tiger too.
You too,
it
guys.
was my pleasure to be with you today. And
Enjoy.
I hope
Thanks for having me.
We'll have luck with trade this week. Okay.
I'll have my technical
Bye-bye,
stuff
guys.
working better next time.
Thank you. Thank you a lot.
Enjoy the weekend, everybody. Take care.
Enjoy. Cheers.
Me too. Okay. Bye-bye. Bye-bye.
Good afternoon, morning, evening, wherever you are. Well, I know where you are, Paul. How's it going? And we've got a new coach, Paul. Paul G.
Yeah. But we're gonna have a little bit of trouble here. We gotta create some sort of naming system here for us.
Well, I was thinking, well, you're a futures coach, right? Yeah, loads of
Correct.
experience. I've heard you're a great asset to the team. But I was thinking you could call me my initials, which is PP. How about that? Does that work?
Well, I'll tell you the only problem with that. I have a cat named Penelope, and her initials are PP.
Oh my God.
We can't do that.
Well, you know, we can call you Paul G. It sounds a bit like Top G, you know.
Yeah. You can call me that. You can call me Gallo. My last name is Gallo. You can whatever you'd like. It doesn't matter. We'll call Paul Pico #1. Paul is #1. That's the #1 Paul. So.
Well, it's great to have you here, Paul G.
Thank you. Thank you. It's a pleasure to be here. Thank you for having me.
Yeah, man. So it sounds like you're from the US. You're from the US, right?
I am from the US. Yes, I actually hail from Orlando, Florida. That's where I am right now.
Florida.
And yeah.
Nice.
All sunshine and rainbows over here. It's very hot. In the 90s like usual. So
are you talking about the woman or the weather? The weather? Or?
I see how that could be misconstrued. I can see that now. I walked myself into that one, didn't I?
All right, yeah. Great.
But yeah.
So are you like do you strictly trade futures or do you
I mainly trade futures intraday. I do trade equities, but on a longer term basis. I'm more of an investor from that perspective. I'm just looking to buy dips for the retirement portfolio, but and I dabble in a little bit of hedging with options and whatnot. But for intraday, mainly futures. There's a little bit of a tax advantage there, and a couple other things that can help you out if you're able and willing to trade the leveraged product. So
yeah, well, I mean, I can see the fan in the roof going there, so I assume it's hot. It's always pretty hot.
That fan is doing so much work every day. That fan's doing more work than anybody. So
well, it's the opposite over here. It's like it's in the middle of winter, so that's why I've got this always dressed like I'm about to go into the snow or something. But not always, the last couple of weeks. And Paul, it looks like you enjoying summer, right? But even when it's winter, you've got your isolated, or what do you call it? Double.
I just so much traveling. I just don't know where I am. Because when I was living in Uruguay, the seasons are back to front. So it's really messed me up coming back to the UK because I kind of left in winter and arrived back in winter. But yeah, it is now summer. But that's my life. So, I prefer to be in Florida.
Fantastic. So, Paul G, this is going to be difficult. If I say over to you, Paul, and then you're both going to go, all right. It's going to have to be Paul G. Paul G, so you don't trade Forex at all? Have you ever tried, or have you ever kind of played around with Forex, or not really?
Yeah, so not much, very little actually. For the most part, if I have looked at any currency pairs, I obviously have stuck to some of the main ones like the yen, the USD yen, and the USD euro for the most part. But in terms of actually trading the currencies, I've traded the USD yen once, and that was in an overnight session as well. So
must have been a loss if you only traded once.
I got relatively. I got to not experience a terrible FX. I got to have a not terrible FX experience, and that was a scratch. So I didn't have to worry about that. But for me and my inexperience with the FX markets, with intraday trading specifically, it's just I kind of saw just from that one trade. I was like, you know what? I think I should just step back, reevaluate things. The way that I trade and like my process, I don't think matches the currency pairs as well as it does something, let's say, as the S&P 500. So,
do you think that's got something to do with volume? The fact that there's no real volume, and I know you get Forex futures and so on. It presents a very small portion of the actual Forex. The true Forex volume. Do you think that's something that's missing when you were looking at Forex? Like that makes it a bit tricky because you can't really see.
yeah,
or not really.
That is a little bit of it for sure. That is definitely a little bit of it. I use my main tool when I'm trading futures is, and specifically the S&P 500. Like I've said, I focus on. I use market profile analysis a lot, so I use TPO charting. If you two are aware of that style of trading.
No, no, that's why we've got you on here. You understand now? This is why we need an expert.
I'm not going to assume anything, so I just want to check. But yeah, so with the market profile, it just seems to work really. It seems to work most well with the S&P 500 being more of an aggregate of the US markets in general. Yes, I can look at it for like the NASDAQ and the Dow, but I don't. It's one of those like analysis paralysis by analysis things. You can't look at. Sometimes there's too much data and you'll never make a decision. So I look at mainly the ES market profile to kind of sum up the auction process for intraday markets on a daily basis for the US in general. So, but I include with a part of the TPO analysis process a look at trend and momentum within the NASDAQ and the Dow intraday to kind of understand, are things all going together or are things diverging, and how does that look in comparison to the TPO charts? So we can definitely dive into that a little bit. I don't want to, unfortunately, I think maybe something worth starting off with today is, as we all know, the overnight was very very
don't say as you all know. Never assume that.
As probably the majority of our viewers know, with the airstrikes in Iran from Israel, it caused a lot of volatility overnight, and within that period, we retraced almost half of it up to the opening bell of the U.S. markets here. And I will say, I am not one who is a big fan of trading after huge events like this. I'm usually this is a sit on my hands and see how things shake out for at the minimum the first hour of the trading day, because I'm not going to get caught up in some false signals in the first hour after a relatively large news headline overnight. So
yeah, I agree with that. And how did you find that initial 2 or 3 weeks of the tariff announcement?
Tough. Those were tough. I think those were tough. That was a tough time to trade. Let's put it that. That wasn't my. I should have sat on my hands a little bit more at times. I think I tended to, as many of us are prone to, sometimes it looks like there's just opportunities everywhere, and you can deviate a slight bit from your plan because maybe things simply just set up more often. But you have to remember, hey, this is a headline-driven market. The headlines are, it is genuinely a headline-driven market here.
Breaking news.
Right.
Yes.
We argue like this all the time about the impact on news and the relevancy, and you'll have some coaches, maybe a little bit like me, who are like, no, I do. It's like I noticed that the US pulled embassy staff out of the Middle East, right? I noticed that, and I thought it was strange, and I knew something was coming, right? And if I hadn't been paying attention to the news, I mean, I wouldn't know that. But there's other traders which are like, just trade what you see in the charts. What will be, right? So I don't know what
like
the
me. That's me. That's exactly me. But
yeah, you're braver than I. Yanni, yeah, I pronounce your name is pronounced Yanni, right?
Yes.
I just want to make sure that I'm not.
That's very great. Yeah, it's the J that throws most people. So you got that bit right. That's the most important part. Yeah,
perfect.
You got it well done. Well, your name's not Paul G for no reason. But yeah, I mean, I think. Have you looked at what I was going to say? Well, first of all, with just going back to the tariffs, those first couple of weeks, did you also? You mentioned it was tough. Of course, it was, but the thing that made it completely untradeable was the ATR. Have you seen the average size of a minute candle is like the size of a 4-hour candle?
It was unbelievable.
I've never seen something like that.
Right. I was seeing ATRs that I have very rarely seen, for sure. The volatility was too high. It was too high for too long. It was very, what people will say is what volatility brings opportunity, but there's only so much opportunity that comes from such heightened volatility. Especially as a TPO trader myself with market profile, you can only handle so much volatility because you are looking for a little bit of you're trying to exploit markets that aren't necessarily normal with some market profile analysis, but a lot of market profile analysis helps you with just taking advantage of daily grinds and normal distributions. When you notice days that are turning into trend days, you can tell by the distributions of time spent in certain areas as well as volume spent in certain areas. And if you can catch on to that a little bit quicker, you can get a little bit of a bigger trade. But when you have those extremely high volatility moments or days or weeks that we've had many of in the last 5 years, especially COVID and whatnot as well, things get a little bit dicier. I don't think that price action necessarily plays by what we would say, quote unquote, the rules of a lot of our analysis, because things are so driven by the news headlines or any new piece of data that comes out or anything, and you just need to protect yourself essentially from a lot of the outliers. So
you're absolutely right. And how do you feel about the high impact news events that we've had lately? Do you also feel like it had a far less significant impact on the markets compared to prior to this year, really? Anything before this year?
You will. Yeah, I mean, you probably have seen that the CPI and the PPI numbers and whatnot that have come out in the recent future have not really done as much to the markets as in further in the past. I think people are starting to not necessarily gloss over the data point, but I think people might be starting to feel a little bit more comfortable with the data point. But just as we're starting to feel more comfortable with this data point, now you have the possibility of tariffs putting a little bit of a wrinkle in that. And who knows, we're still trying to figure out when will those tariffs pop up in inflation, if they will pop up in inflation. I mean, I think that many of us would expect them to pop up in the inflation numbers, but timing that is something of a crystal ball kind of deal. It's very difficult. I don't know if it's going to happen in 2 months, 4 months.
Yeah, it's going to be either a crystal ball, or if you're like me, I've got Nancy Pelosi on speed dial. So
very useful, I must say. You're lucky.
But
she's not in charge anymore, right?
Well, that's exactly what she wants you to think, Paul.
I mean,
that's exactly what she wants you to think.
Big admirer. Big admirer.
Some would say the best trader of not only our generation, but in the history of trading. So
Yeah.
What,
Paul
you say
Tudor
Congress?
Jones, personal coach. I just wanted to, like you mentioned, obviously, you're trading intraday. Like, which time frames do you typically focus on when you trade? Is it like I know some people focus on, the tick chart or the 15-second chart, or they go to the 1 minute, 2 minute, 5 minute. Like, how do you approach that? Do you have different time frames, or how do you approach that?
Yeah, I use multiple different time frames. I think every good trader is usually looking at multiple time frames. For me, for intraday specifically, I'm looking at the 1 minute, the 5 minute, and then I'm looking at the 30 minute. The 30 minute is a part of that TPO analysis that we will look at an example of. We'll look at actually just this morning a couple of lessons that can be learned by anybody starting to learn about TPO analysis or just market profile in general. But yeah, the 1 minute, the 5 minute, and the 30 minute. And then when I'm trying to look at like larger trends, maybe to get a little bit of a understanding of like the weekly time frame, what things are, how the month's going week, I'll look at like the 4-hour chart and the daily chart. So sometimes the 1 hour, but mostly the 4-hour and the daily I'll take a look at as well for longer term.
Yeah, I think I think it's wise, like in my opinion. We all trade differently. Pick a word.
I think they're both good.
to look at to get some sort of feel for the bigger picture, and you always get that from the longer time frames. And then even when you do drill into the smaller time frames, then if it can line up as much as possible with the bigger picture, then it just increases the probability for the trade to. And even when you do all of that, you can still lose a trade, which we'll have a look in a minute. I took a Bitcoin trade yesterday that didn't work. But I don't think that's got anything to do with the missiles that was flying around. But the fact is just that when you wait for the really good setups, even they can fail. Right? That's just the reality of trading. So you need to you have a couple of kings in your hand, and you go all in, you can still lose. Right?
Sure thing.
Yeah. So do you play poker? Are you a poker player?
I don't play as much. I used to play a lot. I liked Texas Hold'em a lot, specifically. I used to watch it all the time, the main events and whatnot. But
it's so similar to trading, right? It's just so that unknown factor, and you only kind of put money on. Not at the casino. I'm talking just among friends. You do that like every 3 months. It's such a great.
Yeah. There are similarities in the way of you're trying to pick things up in real time. You're trying to find patterns in real time of what's the word I'm looking for? You're trying to find like cues, like personality cues of sort in real time. And in the markets, you can look at that as the auction process and what is the personality of the auction? What has been the personality of the auctions over the last 2, 3, 5 days, week, 2 weeks. So
I'm smiling because I'm about to ask Paul. I was going to say, have you ever played poker, PP? Come on, PP. Have you?
That's great.
I did that. Look, there's many ways for the market to take my money. I don't need to sit down at a poker table and make it work.
No, you don't play for money. It's like you just put some chips. Like there's no money involved. It's just.
I am a musician, so when I have free time, I'll be on stage. I won't be sitting around a round table. But
he is a musician. Yeah.
Beautiful.
I don't even know which instruments you play. Is it like did you say piano? That the one?
Yeah, I play the piano badly. I used to play the oboe badly, and I play the drums badly, and I write bad music.
Well, I can play That one. I can do that one.
You know what the funny thing is? I can't play that. I never learned it because why do I?
Oh, you got to be joking.
Because I'm classically trained. I'm like, why do I play stuff which is like for people who don't know how to play the piano?
All right. Well, anyway, all right, Paul G. It's great to have you here, man. I think it's going to be a very valuable mix to what we do here. That's for sure.
Thank you. I'm glad to be here, and I'm glad I'll be happy to learn from you two as well, especially on the Forex side and the crypto side. I have little exposure comparatively to both of those things than you two, so it'll be a lot of fun to learn some different markets. I've always said, I try to stick to my wheelhouse, relatively speaking, but I'm willing to learn others. I just like you were saying, Paul. I have enough ways to lose money in the markets that I know. Why should I expand into more markets before I'm ready to open myself up to that can of worms? So I say that in cheek and tongue there, but the point is try to stick to what you're good at, and then learn a little bit in different areas. And when you feel comfortable to maybe go into another market, feel free and do so.
That's so true.
We may have actually accidentally inverted our messaging here, because I think we're not supposed to be messaging learn more, lose more.
Exactly.
Just like, well, our message here is just suck less.
Yeah.
Just suck less.
But the point is,
Sorry, carry on. Oh
no, I was going to say the point is to get enough time in front of the charts in the markets that you are interested in, to where you genuinely have a strategy or strategies, and you feel truly comfortable with putting the money down and making your bet and putting on some trades. So I think that's the moral of the story, without the jokes. So
so you focus on the three main ones, the ES, YM, and the NQ, right? Is that right?
Yeah, and I mainly I do not trade the NQ. I do not trade the NQ. I just use the NQ for Qs, and then the YM I'll trade very, very subtly. I do not trade it very often. It's very whippy. Like the bid ask spread can get a little odd, especially as of lately with the YM. But yeah, I feel more comfortable putting trades on in the YM than I do in the NASDAQ. The NASDAQ is a different kind of beast of getting used to whipsaw action and whatnot. But it's a great tool for using for analysis in the S&P 500, because I feel like what many of us have realized and would come to logically understand is that the NASDAQ tends to lead the S&P 500, be a little bit of a leading indicator in the intraday at times, and in the longer term as well, because of its heavy weighting in the S&P 500. So, or the tech stocks from the NASDAQ being such a heavy weight in the S&P 500. So yeah.
Yeah, I agree. Like the YM is like, if it goes wrong very slowly.
It's all relative, but I agree. Yes. Yeah.
The NASDAQ, when it goes wrong, it's like gone.
Oh, man.
Not the money, the price. It's just gone. The price is gone. And sometimes the money as well. Yeah. If always use bracket orders. Do you trade with bracket orders or?
I just trade with a stop, and then I'll place my targets separately as separate transactions. I did use bracket orders in the beginning, but I'm extremely active, so like I am a hawkeye over it. I'm not like trying to swing trade anything or put a trade on, walk away from the desk, come back 5 minutes later. So I just make sure that I have my stop in when I place my trade, an immediate stop, and then I'll place my target as necessary. So
yeah, but as long as there's a stop, right? That's the most important thing, is like you getting in. And this is really the question. When you get in, this is really what I meant by bracket orders. Obviously, when you have a stop loss and a take profit at the same time, but you can still have a bracket order with just a stop loss. So is that something you do, or do you not necessarily risk the exact same ticks or points per trade? Do they vary, or are they kind of fixed?
So no, they're not fixed. My stops aren't fixed. My stops, what I'll do is I have a, I guess what you would say, like I do have a bracket order immediately populated in my personal brokerage, like where I buy the market. It immediately put, for the S&P 500 specifically, it'll immediately put my stop at 4 points. But then that's just to simply allow the stop to go in as soon as I'm buying the market, and then I'll adjust the stop immediately as necessary to where I need the stop to be. So I'm not trading around news events where that stop is going to get blown out in a half of a second.
Come on,
S&P
Paul
500.
G. Come on,
So-
Paul G. You were hoping for a cowboy trader here.
Yeah,
We're not
yeah,
gonna get
yeah.
it out from-
Gonna
Yeah,
have to
no, but
look
you're right.
elsewhere.
You're
No,
right.
no. But yeah, so it just depends on wherever. It'll depend on the setup as far as to where that stop will be placed, and obviously that trade, that stop is going to be in an area that not only it logically makes sense based on previous price action and TPO analysis, but that will also make sense in terms of, my risk reward. How much am I making? I can't see myself going below anything of a 2-to-1. So unfortunately, there are times where you see a setup, but what you have to risk versus where your target would be is just simply not good enough. And then you miss out on an even bigger move, and it would have been great. But guess what? I got to stick to some sort of rules. So, but yeah.
Yeah, it's like putting that wild animal in some sort of cage, right? You need to kind of put something around so you can control it. You can't control the markets, but you do have control over where you get in and where you get out, right? And
Exactly.
that's it. What it does from that point is up to the gods.
Up to the market gods, for sure.
Yeah. Yeah. So and volume, is volume a big part of your trading or not really?
Yeah, actually, with typical TPO analysis. So maybe I can just start by explaining TPO analysis a little bit for anybody watching that's interested. And maybe, you know what, I can share my screen too. Let me just. This is the first time I'm new to TradingView, and I've set up my TPO charts and whatnot as necessary on TradingView. So give me a
Don't
little
worry
bit
about
of
that.
slack here.
Don't
Okay,
worry about
so
it. I also don't know
share
much about TradingView.
screen.
No,
All right. I just need to. Which one am I sharing here?
yeah, be careful with that one now. Don't share the dodgy one. Make sure it's the chart.
Yeah. Here we go. So
all right, great. Okay, we can see it. Thanks.
great. So now, with a TPO chart, specifically, what you're looking at is 30-minute time blocks each day in the regular trading hours. You can also look at overnight trading sessions as well in 30-minute time blocks, but for simplicity, we'll just stick with the regular trading hours. And each trading block of 30 minutes is denoted by, depending on the software, either a letter or a number. So in our situation here, I'm looking at you see all these green and red blocks here. This is the previous day, and you see A, B, C, D. So starting from 9:30 to 10 would be the A block, 10 to 10:30 would be the B block, etc. When we're looking at these 30-minute blocks, it's basically this distribution here that you can see. It's showing us how long price has stayed in certain time pockets. So we're starting to see in the auction process, where is time most spent? If you were buying I don't even know, if you were buying, let's say, a baseball, a signed baseball or something in an auction, and the auction immediately, as we can see in this chart, let's say price starts out around 6020 on the S&P 500, so 6020. Dips a little bit to begin, and then we go throughout the day up here, and prices being constantly auctioned for that baseball between 6035 and 6050. We're seeing that true value and time is being spent in these price areas, and this is where people feel comfortable, relatively speaking. Now, with TPO analysis, you can take it a little bit further and combine it with the volume distributions. So if we move a little bit right here, you'll see a congruency of sorts where the distribution, these blue bars here that denote the volume, we can see that there's some congruency in terms of a lot more volume being spent where more time is spent. Makes sense. Now, the key thing in market profile analysis is understanding that when we're looking in the past, the closer we are to the current period in which we're in, the more relevant these TPO days are. So the further we go out in time into the past, they are going to hold less relevance. And I think that a lot of people can denote that from other technical tools, but just saying with TPO analysis, the same applies, where the further you look back, more minuscule levels begin to diminish and newer ones arise. And what we're looking at here a lot of the time is when we see these big distributions popping up throughout each day, we're trying to understand where is in the distribution where we would call like the, when you look at a normal standard distribution, where it went in statistics classes, we learn, 68% of the time we're within one standard deviation, and then 5% of the time we're within two, and then outside of that, it's like 3 standard deviations. You're at
That's
the
the
tails.
bell. You're talking about the bell curve distribution, right?
The classic normal distribution bell curve.
Yeah.
Now, with the markets, we don't get that pretty normal distribution bell curve all the time. There's always skews, and the point is to try and understand where is that, where are we falling in value 70-ish, 68, 70% of the time. And these values we call in market profile, variable, or the value area high, value area low, and then in the center of that would be, or not necessarily the center, but in this case, roughly the center, the point of control. Value area high being the upper end of that 68 to 70% range of value for this distribution, value area low being the lower end of that, and then the point of control being where most time and or most volume has been transacted within that value area. And what this does is it kind of gives us an idea. It's like a road. It's like it's a guiding map of sorts to understand where we can find value maybe in the next trading session. And if we don't find value in the same area, we can demise whether it's we are starting to transition to a new area of value or not. So
Yeah.
in this case, today's example, we would look at the close of here. Maybe I can pull up. Can you see? Okay, it's not showing it again. All right. I want to go. You know what? I can just stay here. That's fine. Give me 1 minute because I want to pull up very specific price levels of where we closed and where we're opening, etc. So on the ES yesterday, we closed at roughly 6,048. So we closed right where the value area high finished or completed to be at, essentially, for yesterday's distribution, which is a relatively bullish signal. Like we have also bullish signals over the previous week when you look at the distributions prior, you can see I have the point of controls noted by a yellow line, so it's really easy to see here. When you have migrating points of controls where the most time and volume is being transacted, when you can see migrating points of controls in an upward trend with value areas overlapping each other in an upward trend, that's a bullish signal. That means that in the auction process of people wanting the S&P 500 or not wanting it, we are constantly finding comfort in higher areas of value. So,
sorry, just a quick question.
Yeah.
Paul G. Is that true on pretty much any time frame, like the 1 hour, the 4 hour, or do you feel that it gets more accurate the smaller you go with the time frames?
The 30-minute time frame, the 30-minute blocks is the traditional use of it, and it's the most used version of it. That's not to say that this is not used in a weekly format or a monthly format. There is software that exists that can help you compile this data into longer term value distributions to definitely understand that longer term, maybe yearly or so, or monthly understanding of where value is heading. But for intraday trading, I would say that would be very valuable in niche situations for day trader or intraday traders, but very valuable for swing traders. I would say I'm not putting on futures positions, holding them for weeks on end. It would be different, like in a past, in my past with when I worked in the commodities business, and I had the actual cash commodity underneath me. That's different to hold futures positions overnight. You're hedging yourself. There's constant hedging scenarios to be had to protect yourself, be a little bit more maybe delta neutral to lock in what we would call your basis risk, which we can get into at another point in time. But I personally, as an intraday trader, I am not going to be holding positions very often overnight, if at all. I'm just not that risky of a guy, especially in today's climates of anything happening, for example, last night. So it is a very proper time to try to teach that lesson, I guess, with last night being an example.
Yeah, I think the thing about these news kind of things, it's only it kind of plays out in the market, and then you hear the news. Does that make sense?
Very many times, I agree.
Yeah, so it's like it happens, and you go, "Whoa, what just happened now?" And then you look, at what just happened now, and then you go and search for, did something just happen now? It's not something you can plan for.
Yeah.
Right.
Because there are institutions. There are institutions that have algorithms that are directly plugged into data feeds, news feeds. There are things that are much more reactionary than we are, and have the ability to make those trades in a much quicker fashion and take advantage. So, and I think the understanding is just, let's not try to play that game. They're playing that game. Maybe we don't play that game because we're not as well capitalized to be able to necessarily create those types of algorithms and that trading strategy, or or that can simply just be algorithms that are being used to maybe offload risk in like larger investment portfolios. there's plenty of scenarios where algorithms can be being used for different purposes, and but they're taking advantage of the same news headline or whatever because they're connected into, let's say, a Bloomberg feed or what have you. So, or Reuters or etc. So,
yeah.
but
I mean, yeah, I'm still a fan. I still believe that when you're set up, like if it's a setup that's as part of your playbook, if it's set up, you got to take it. That's it, right? You take it. You know exactly what you're going to get out, and it either works or it doesn't work, right? But as soon as you start to become fearful because of the last trade was a loss and it was a good setup, and you're like, oh, but the last one didn't work. What about this one? What if this one also doesn't work? You're going to start to get that two-step click syndrome. Do you know what that is? Two-step click syndrome.
Oh yeah.
Like you want to take the trade, but there's that doubt that kind of keeps you back.
Oh yeah. Yeah, that plagues many traders, I feel. Yeah. And I agree. And I agree 100%. I would say the key is to just stay away from the big time, like when
the known events. Yeah.
Right. And if you can avoid and to make sure that you're trading when you have trades on, especially if you're an intraday trader with a leveraged product such as a futures product, that you should be able to check on that trade within reasonable time intervals to make sure that obviously you should have a stop no matter what, but stops can only do you so good in crazy news events that are happening overnight in illiquid markets. And I think that's the lesson of trading overnight. Like if you're holding a futures position overnight, is understanding it's good to have your stop. Obviously, you have your stop in, great. If you think there's a longer term trend to be played, but the problem is the illiquidity in the overnight session. If a big news event does happen, you might get stopped, and that slide, essentially the slippage, can be much more severe than you thought. So,
yeah.
But I completely agree with you. During intraday, for sure, you can't, unless there's a big known news event like 10 a.m. this morning with consumer sentiment and what was the other one? Consumer sentiment and inflation expectations. Entirely different. You don't you can trade today, of course. You take setups, whatever, but probably not smart to be taking a trade at 9:50 a.m. or 10:01 a.m. or right around that news event, because it is an unknown, unfortunately. And there are probably better setups to be had with less unknown. That will happen literally at some point, probably within the day for yourself. And I actually have a pretty good example of this if we want to go into it today, for what just happened today. So
you can show. I mean, this is actually Fridays are typically kind of a wind down session, and we talk about our bruises or successes for the week.
Okay. Yeah. No. We can maybe what we can do is we can revisit if you guys would like to go into anything, and we can revisit if we have time.
Jump into it. It's great. I mean, we like pulling the string on Friday, so it's fine. Just go for it.
Yeah. This is you are the crickets. No, I mean you're the new coach. We're really excited to have you here. So we want to get to know you are and how you trade and all of that. So
yeah, of course.
Yeah,
you
definitely. Can show us maybe like did you place any trades this week? I've placed one yesterday on Bitcoin, and it was one of those trades that I got excited about because it's like everything is lining up so beautifully. So for me, it was a good trade, and it didn't work. So that's fine.
Well, I will say I actually took a little bit of a holiday up until Wednesday. So I haven't made a trade in over a week now, because the last couple days have been the only days that I've been able to pay attention in the last like week and a half. But I have not taken a trade in the last couple days, unfortunately. And today was when I saw the news last night, I knew today was possibly going to be a day where, again, just sitting on my hands because of the unknown of what was going to happen. So, but yeah,
there's definitely nothing wrong with that. We preach that a lot here. If there's nothing to trade, then just don't trade, right? You wait for the setups that you wait for. Paul or PP would agree with that, I think.
Okay, let's make it.
I can't call you PP.
My idea. PP is fine when the other Paul is here, but let's just not make a habit from the start.
Okay, can't I? Okay, we're gonna have to. Yeah, I can't even extend the name. Paulina. No,
you could call me Paul.
Paola. Hola. All right.
Later, it's going to be great.
Okay, if I just say Paul, then it's Paul. If I say Paul G, then that's Paul G. How's that?
Perfect.
Sure, but I don't think you'll be able to stop saying PP this session. I'm sorry, I don't think you've got that much self-control.
Oh, PP, stop it.
I told you.
All right, I'm going to just quickly share my screen so that we can just have a little bit of a catch up of or to just carry on based on where we left off yesterday, and that was obviously with Bitcoin. This is the 4-hour chart, and we were waiting. I was, and Paul also had one of these levels, but Paul doesn't trade Bitcoin. He's the Bitcoin expert or the crypto expert. He uses Bitcoin as like just like you mentioned, the NASDAQ. You look at the NASDAQ as some sort of barometer to look at the other two markets you trade. Paul does a very similar thing. He looks at Bitcoin for exactly the same reason. Bitcoin's the leader, and then he looks at the coins and looks for setups that's in the same direction. As for me, I do trade Bitcoin, and yesterday we were at that support level that it looks like obviously after these additional candles, it looks like a bit of a nightmare, but at the time it was beautiful. It was beautiful. I got that little clean bounce of there. Usually with a strong support level, if I get a clean bounce on either the 1 or the 4-hour time frame, I take it. If I don't get a clean bounce, I'll go to a smaller time frames, and the smallest one I'll go to is the 15-minute time frame, right? And even on the 15-minute time frame, it gave me exactly what I was looking for. I'll just quickly show you.
Yeah.
Which is basically this divergence in price. Okay, so come on, right there. Okay, and then it pushes back up, and when it breaks the high of the last closed bullish candle, that's when you get into the trade. That's one way you can trade it. I'm struggling today. Yeah, I really am. I can feel it. My brain is tired. But then this neckline, this is another area where you can wait for confirmation. That's safer. Okay, when you wait for the break of this neckline, then you've got to confirm double bottom, and then you take the trade. This one failed, obviously, but this is exactly the same setup I took on gold, where I had a 1-to-11 risk reward ratio, and that one I actually. Let me quickly show you that one. Just to pay attention to this setup, right? Well, just exactly what I just explained there. And if you look at gold, it's identical. Right over here, let me just delete all these lines. We'll come back to that. Otherwise, I just won't know where I am. I don't know where I am most of the time. You'll get to know me, Paul G.
Already am.
I can be better.
Good things.
I always look in the mirror and say, yeah, you can be better, man. You can be better than this. All right, let's have a quick look. Probably would have helped if I looked at the date. The 15th of. Oh my God. Yeah, 15th of May. Oh, wow. Nearly a month ago already. Oh, my goodness. Sorry, let me just go to the 15 minutes time frame.
So true, though. It's
15th
crazy.
of... Oh, I hate these auto lock things. Okay, here we go. So if you look at so this was the daily level. Okay, so now you got to bounce off here, but this is the 15-minute time frame, as I just explained on Bitcoin. The clean bounce has to come from at least the 1 hour or the 4 hour time frame, and we didn't get that. So in this case, we formed first this lower wick, but it was exactly the same thing. You made that high, the low, and then you moved. You moved to the upside, came back down. You made this divergence. I'm going to flick between the charts so you can see exactly the similarities, right? And then you break the neckline there. Okay. So I took the trade when it broke the high of this last close bullish candle, and I took that entire move. It was a 1 to 11.
Beautiful.
Right. So, yeah. So now look at this setup, and then you look at
1 second though, real quick. Sorry, on that one, was your stop below that swing low, or was it below that bottom?
No, I took the trade not based on the 15-minute time frame. I took it based on the 1 hour time frame. So if you get a clean touch on the 1 hour, you place the stop loss below that candle. Okay, so that's the point of invalidation. So again, but I was just in the session. That just happened to this 15-minute formation just happened to form during the session. I was already in the trade by then, based on the 1 hour time frame. This just took a bit longer to form. But when I saw this, and obviously the support level and everything else, and I know this setup, I've traded this particular setup many, many times, I got really excited, like a really good setup. I get excited because I just know what they look like. I know what they look like. And they work out beautifully when they do work out, and they do work out most of the time. Like what I mean, most of the time, I don't really want to put a figure on it, but let's go with let's tone it down. So 70%, 70% of the time, they work. They're one of my favorite plays. It's this divergence in price, and then you can trade that before you even get the double bottom confirmation. I just love these setups. So it was a beautiful setup in my book. And again, if you just look at that setup and compare to this gold one, it's pretty much identical.
Yeah.
Right.
Yep.
So, but in this particular case, on Bitcoin, it just didn't work. Okay. Well, they're not always going to work. But so that's the trade I took yesterday. But now on Bitcoin, and it'd be interesting to get Paul's take on this as well. Is the picture now? I mean, I do know that we found support on the 61.8. Let me just draw this level quickly. We did find support on the 61.8, but I am now a little bit concerned, and I'll tell you why. Because we didn't find support at that level, I just feel like if you zoom out. Let me just delete these lines. All right. Do you see this divergence in price here at the top?
Right.
See, now this level had to hold, but it didn't. So now it's a bit tricky. And now, as I said, it just bounced off the 61.8, but I'm not as bullish anymore because of that. Now, I could be wrong, obviously, but for me, Bitcoin, I feel this could potentially go lower, but be in a very awkward spot right now, I think.
I agree. I agree 100%. I literally was thinking exactly what you're saying in terms of it's very awkward. This feels like a very awkward area to be entering anywhere, like in a long or a short. I personally wouldn't like it. I would personally want to see more confirmation, but
yeah, you see now for me, this is now definitely a divergence in price. Now this is, if you just have a close look at this chart, and now I'm going to go back to gold again, because these patterns just keep playing out on all different markets, right? Now look at gold. not where we are right now, but I don't know why it does that auto scroll lock thing. We made those crazy highs on gold, and then we pulled back, and then at the time, let me just do this, right? That's obviously what it looked like at the time. Go, oh, is it going to make new highs? Is it going to make new highs? Is it? It looks like it, and it just didn't. Okay, it fell short. You got that divergence in price, and it moved much lower, right? And this is obviously the support level. We got a bounce off there, and over here is where I took another short right on that third touch. So that was another beautiful trade, right? But are we going to see the same on Bitcoin now? Because this is now looking very similar to this.
Right.
So we could break this low. This is definitely on the cards. So there's one or two things. I'm just not that bullish anymore. I was very bullish up until this support level broke. Now I'm like, ooh,
yeah,
we'll see what happens. All right. So and even if it does go up, it's going to have to deal with the fact that we've got a lower high here. So it could be, you could potentially get a third touch there and then go lower and then eventually go up. So I think that break of that support it really changed the picture for me on Bitcoin, definitely, especially in the short term anyway. Yeah.
Yeah.
So
I will say in the gold chart there was something very interesting. I think it was on the 15-minute time frame that you were on.
Yeah.
Where you said that that double, like that close to double bottom was occurring, but in a little bit of a divergence.
Oh yeah. I just need to first. There we go. This one, yeah.
Yeah, I think this example, this is a really good example of a trader that I follow that has a lot more experience than I do, has been in the markets for a long time, who says that when you see the H pattern, it stands for hell. You do not want to be a short in an H pattern. When you see, for example, you see that so you got a breakdown, let's say on May 14th, breakdown, and then consolidation, and then another big breakdown, and then that little lowercase h starts to form. And a lot of
you mean like that? Yeah.
A lot of beginner traders, what a lot of beginner traders will do is they'll see exhaustion towards the top of that lowercase h there. They'll think, all right, this is a good short to continue. I mean, look at the chart. It's been going down this whole time. Why would it not continue? I just gotten I finally got a chance. I missed these last few opportunities during consolidation periods to get in. Now I've got a chance. And then it immediately turns on them. This lowercase h pattern, I see over and over again, is just for anybody out there that maybe you're just not seeing per se that kind of you just didn't see that activity, and you're wondering why maybe you put your stop above the top of that little hump there, and you always are getting stopped out. A lot of the time, it's a low percentage. Let's put it this way: it's a low probability trade to work out being a short at that area. There are times where it'll work. Sure. Don't get me wrong. There will be a time where it works. But whatever that level is, where it's where that little hump is occurring, that area better be one of the biggest resistance areas that you have marked off for very valid reasons for it to actually continue and create another leg down.
Yeah, I mean, the only time you would short this, I would argue, if this was a retest of a breakout, right? And
exactly.
Your bias is short and so on. Yeah, but this was the bias or the catalyst for this trade was you trading off a support level on the daily time frame. So now you're looking for patterns or candle formations in the same direction of the catalyst that you've identified. You see, so if this is the daily support level. Now, there was nothing at this point over here. There's no patterns or anything like that. We were just ranging to the side. Yes, we did get a clean bounce, but again, you don't look for clean bounces on the 15-minute. Clean bounces has to come off at least the minimum 1 hour time frame. So when you don't get that, then that's when I will look for patterns on the smaller time frames, and we found it over here. Now, just to make a differentiation. Oh God, I do apologize. I really do struggle. This over here, this is the daily support level. We pierced through, and now look, you don't just leave. Oh no, we pierced through the daily support. No. It's like, I mean, it's the daily support. It's a very strong level. It could just form a lower wick and then push up. So you want to look and pay attention to all these little patterns that could unfold, head and shoulders formations or little ascending triangle, anything like that. And that was just beautiful. And that is exactly why I felt that on Bitcoin, this was a very, very good setup. And to me, that's an A. It's a very good setup.
Yeah.
And
this goes off of what you were saying earlier, where like if you are super focused on a smaller time frame and you are not looking more top down, you get caught up in these patterns that don't play out. Yeah, right. So that's kind of the moral of the story with that H pattern. You need to be looking, there needs to be a bigger scope, and that's exactly what you explained. So
yeah, exactly right. So that's Bitcoin. Paul can definitely expand a lot more on, especially on the altcoin markets. Would be very interesting to see how that performed or how that behaved or acted. Oh my God. Anyway, all right. So gold. Gold. I have now. I was a bit neutral on gold, but I'm definitely now more bullish. We had this breakout. First of all, we broke out of this this downtrend. Yeah. So this divergence in price obviously led to much lower levels. That was the daily support. We bounced right up to a third touch. There was a nice little short there, and that was it. I wasn't really interested in price action since then. Actually, I think I did take a trade here somewhere, and it was a losing trade. And then we just kind of messed around here. Wasn't interested. In fact, I wasn't from. I don't want to use the word fundamental because I don't focus on fundamentals. But if you just look at the dollar index, it would make sense for gold to go up, okay? Because the dollar index is obviously weakening, and expecting a lot more weaknesses on the dollar. But at the same time, gold has moved to such insane levels. You're like, it kind of like, can it really move higher? Of course it can. But from a technical point of view, this week we were just in a very kind of messy range. If I just mark out these levels here, you see this price action here. It's very difficult to trade this. So I was waiting for price to break out of that resistance. So we got that now. That's great. So if I can get a retest to this breakout level, I'll definitely be interested in a long position to on gold to the upside. And that would line up very nicely with what we can see on the dollar index. Okay, so the dollar index, this is the weekly time frame. That was the support level. We made a bit of a correction. That correction is over, and we completely took out this hammer that gave us that's where the correction followed from, based on that hammer right on the support. Back below, very big down move on gold for this week. I do still think we're going to get this 89.5 level over the next number of months. I don't know how long it's going to take, but I don't expect it. Let me just be clear. And I've said this before, and I'm going to say it again. I don't expect it to move in a straight line. It's going to look something like this. Okay?
Yeah.
That's what it's going to look like. Not just one big candle. So you still need to, this is a very good indicator, the dollar index. So if the dollar index is going to continue to go lower, which is the probability for that to happen is very, very high, then it's reasonable to assume that that gold is going to go up. Okay.
Yeah.
But the technicals needs to make sense. So at the moment we broke out of that resistance. So a retest would be perfect. So that's what I'll be waiting for next week, for a position to the upside, potentially to the all-time highs. And that resistance area, that's where things can potentially start to get funky again. We'll see. Right.
Yeah.
Any thoughts on that?
I like that. The idea of that gold trade, I like that a lot. it just is going to take a little bit of time probably to play out with that dollar index. And also that dollar index chart that you were showing where we broke down below that area where buyers were trying to defend that little support area. If we can maybe see some sort of consolidation below that area to show a little bit more acceptance of the lower levels to then follow another, maybe then what you're saying, that move further down starts to ensue, and then that gold chart starts to look a little bit like it's going to break towards the highs. So
yeah, it's definitely this is like, but you should be full on bullish on gold right now.
Yeah,
this is because this I mean, these three touches or whatever, like the three witches, the three witches. we just make up patterns here. The three witches, that pattern has been broken. And this reminds me of, like, if we go to the pound US dollar, we had a head and shoulders pattern here that we've been watching. So you see now this red line over here, this already, they're all kind of red, but this horizontal line, yeah, this is the weekly resistance. So there was a beautiful trade that I took right back to the support. And then we got this head and shoulders formation. Okay, so my target was, let me just delete, maybe not, because I'll done that before. Like, and then I just kind of missed the level. But anyway, if this level here, this one here with my cursor is, right, that is the support level I was expecting this to come down to, and that would have been trade of the year. And I said it for like I don't know how many weeks. It's like, that will be trade of the year. It will be Christmas if it can come down to this level, right? Because then it's going to be like it's like really when you pull that slingshot and it just goes all the way up. And I was really hoping for that, but that happens a lot. I hope for levels, and I just don't get it. I just don't get it. But I did take a short.
Bitcoin to return to $3,000 for a long time.
Yeah.
Yeah, you got to. I know, Paul. You really need to let that go. Paul keeps talking about that, and I'm concerned.
I was just sitting there looking at it. I had the money. I could have bought 2 or 3 or 4. I'm like, and I didn't, because I'm like, that's a lot of red, and I've never had a pandemic, so I didn't know what to do. So I agree.
Yeah.
So this head and shoulders formation, we did get a close below the head and shoulders formation. That's when you confirm the pattern, but you don't trade it at that time. You always want to see a pullback. And then we did get it, and we got a bounce off there. So I took that short. It was a beautiful move. Entered the second position when we got a retest, and then we got that. It just kind of closed above that resistance, and that's where I got out. So I didn't get anywhere near what I would have liked to have gotten on that move, because my level was much lower down. But at the same time, and this is what I want to show you, and this is the similarities. Okay, so if you look now at this year, so this is your 3 touch, and you always get a rejection of there, and not always, but the probability is definitely there, and they're quite strong. But then you eventually break out of it, and then once you break out of it, everything that's bearish is now invalidated. Your head and shoulders pattern is gone, right? Your 3 touch with the downward slope is now completely gone. Now your bias turns bullish. Okay, now that's exactly what's happening with gold right now. Okay, we don't have the head and shoulders or anything like that, but we do have this the 3 witches pattern. And we broke out of it. We broke out of resistance, full on bullish. Okay, full on bullish. This is going to go higher. All right. So that's gold. Bitcoin for me is out of play right now. Gold, I'll be watching. The NASDAQ, I'll just quickly run through it because Paul also needs to get his little shot there. Not shot. You know what I mean? Your little slot.
What you got? There's a shot. What?
So we had this ascending triangle. This is on the 4-hour time frame on the NASDAQ. I didn't like this pattern. Because you've got the all-time highs just above it. Right, so you've got a potential breakout, which is very difficult to trade on the 4-hour, with the all-time highs right above it.
Yeah,
It's just messy. That's typically when the markets are really choppy, and there's a lot of like typically at all-time highs, or not just all-time highs, but at key resistance levels in an uptrend. At those zones, it's always messy. It just is, okay, and that's where we are. And yesterday we broke out of this pattern, so this pattern has completely been invalidated now, right? It's not valid. So we basically back to where we've been this whole week in terms of the price level itself. So I'm still staying away from the NASDAQ. I think this is a very dangerous area to place any trades. And we'll see what happens if we even get to the all-time highs. Maybe we just fall short. Maybe we do break all-time highs. I'm not going to guess, but I will start to pay attention at the all-time highs and see how price behaves. Does it really just break out? If it does, that would be great, because then you can just wait for a retest and then trade it from there. But right now, I don't think it's a good time to. So really, at the moment, I just out of the 4 markets I'm watching, I'm only interested in gold right now. I think those are the 4 markets. So now over to, I'm going to say Paul. I'm not going to say PP.
No, just say it. Enjoy it while you can.
Right.
Yeah, sure. Let's jump in, and then maybe Paul G can have the last word. Let's have a look. I've been podcasting all day, so I'm checking what's happening. But yeah, can you see my screen okay, guys?
Yeah.
Yep.
So yeah, I mean, as Jannie said, Bitcoin's done just for a minute. Not, and I don't mean like Bitcoin's over. I'm just in terms of trading.
It's gonna go to zero. It's gonna go to zero.
It's terrible. That's it. Sorry. Right. See you later. Bye. Obviously, look. So we've got the 4-hour 200 MA on this 2-hour chart, and I mentioned yesterday that this Jannie's potential trade here, which is to buy the bottom of this range, which principally makes perfect sense. You had a bit of support behind it as well, but unfortunately, with these news events, as you were discussing at the start, this is just what's happened, and Bitcoin now needs to recover a little bit just to give us some trading. Now, obviously, basic trend dynamics. We haven't gone lower than this. This is a higher low, so everything's fine. But there's now a few obstacles in Bitcoin's way, and that of course is the problem. You can see here looking at this back pattern, which I think is pretty much over with. We've got the higher low, but yeah, we've got a little bit of work to do, and now we're running into the weekend, so I'm just going to close that down because it's just not particularly relevant right now. And if we just have a look, but here this is quite an interesting chart. Bitcoin 4-hour. This is the head and the cup and handle we were talking about. I've had a nice flush retest following this drawback, this drawdown right to the upper trend line to confirm the SR flip. So we've got a bullish context. There's no problem. It just means that as Bitcoin dominance is illustrating now, if I just show you it, I can just find the right chart. Yes, this is Bitcoin dominance. And look, we were just breaking down, potentially having some good improved altcoin trading. But then we've had this event, and now everyone's exited the market again. This represents, of course, Bitcoin growing in proportion to the altcoin market. But when people sell their altcoin positions, this is essentially what happens. So, the context for altcoins improved movement is still here. You'll notice my note on here from yesterday: altcoins need a bearish retest. We haven't had that. So the weekend is really off. But if we just find just clean a chart. So here's Bitcoin dominance daily. Look, this is what we're dealing with. It's come right back, potentially up to here, which isn't great. But another opportunity, of course, could be here for altcoin trading if we get a rejection here. So you need to just pay attention to this pattern and make sure we don't pop ahead above it. But we were talking about ICP yesterday, and the premise of ICP, if you just look over on the left, this was the chart I was looking at. The premise of the trade was to either, if Bitcoin moves upwards from here, which would be a bounce from Jannie, your trade, if you got your trade in play and it bounced, then we would have had a move up from here. And then the idea of the trade would be to come in simply on the retest. Now, that hasn't happened. And you'll notice that the other scenario was, and the reason why I liked ICP so much is because it also accommodates a nice retest of this golden cross, which is happening at the moment following this sort of reversal pattern, this very janky reversal pattern of sorts. So ICP is in play now, and because Bitcoin dominance is essentially putting in a bearish retest, still technically a move down from here could facilitate that trade. And if Bitcoin does on this 4-hour chart bounce up to here, then we've got some movement. But It's a bit ambiguous because you can see here again, this is a different chart, more clean. You know, we're above the point of control, but we're stuck again behind this the 4-hour moving average. So we need to see what happens next. Therefore, for my trade, I've now split it into 3 so I can have a better assessment on what I'm doing. So this is 12-hour in the middle and 12-hour on the left and 1 hour on the right. Now, what I've identified is that we're putting in a bearish retest of this pattern, which is half formed, meaning that I'm exactly in the place I want to be to enter, just on the wrong side of this line, right? Just by a Satoshi, a pip, whatever, right? So I need to see, so what I'm waiting to see to enter, I'm probably going to enter a leverage position on this. I'm looking to see this very simply on the hour. I just want it to pop its head above, come back down exactly to the price point, which it is at the moment, but on the other side of the pattern. And because we've got oversold conditions, then I've got one bullish signal. It's where I want it to be on the higher time frames. And then that is the premise for a trade. Now, I might decide, of course, that I'm going to take profits just here with a bit of a kind of a scalp just up to here. I'm not going to try and play it up to here until Bitcoin's got some more clarity. But that's what I'm waiting for now. And obviously, when we talk about just trade what's happening on the charts, if Bitcoin does continue down from here, what I want to see in terms of bullish confirmation just isn't going to happen, and it will continue down probably to this trend line. Therefore, it's a waiting game. So this is another argument for people to look at multi-time frames, because this seems like a great place to buy, but when you zoom in or you look at it from a slightly different perspective and you get rid of this golden cross, I'm like, actually, this is primed to come down. It's ready to come down. It's just waiting to see what Bitcoin does. So if Bitcoin does start to recover and then takes its some of its moving averages back, if I can find the chart. So if Bitcoin just manages to pop its head above and do the same thing, then all of a sudden we're back in play again, because we haven't got a lower low. Everything's fine. We just need a little bit of an upwards movement and then down. But I probably will check the news as well, just to check what's happening. I mean, any thoughts on that? You want to rip that apart?
Yeah, look, I mean, it's definitely finding support at the 61.8. I'm not sure if you can draw that on your 4-hour chart. You can clearly see that it's definitely finding support. The thing that I'm in conflict with is like there's an argument for both long and short, and that's why I don't like it. It needs to be, like we always say, like the evidence needs to be overwhelming, right? It needs to be like, definitely your bias is definitely bullish. There's nothing. And there are no contradictions. Now, the only thing that bothers me is the lower high, but we still got that V shape in which that higher low, that very strong pivot that formed around the 100,000 level. That's definitely holding, and we formed now a higher low after that 100K level, which is about 103. And that 103 level is bouncing off. If you can just add your flip levels there from that low of that V to the high of that lower high, yeah, right there, you'll see that's the 61.8. Yeah, so it's bounced off the 61.8. So that's obviously bullish, but it's not enough for me now. It needs to first break the lower high now, because that support level where I took the trade, that was the ultimate spot. But for me right now, I don't feel too confident.
Yeah, this is the game though in crypto, and the reason why it's if and or then or when sort of thing is because that's how you get the edge. Because Bitcoin, it just likes to, it'll give you a good setup and it'll be like, hey, this looks great, and then it'll just do something else, right? And and the reason, and I know this, right? I mean, I've been so many times, Bitcoin has given us this great setup, and then it's just like something happens and it's the first thing to, and it just tanks the market. But as we insinuated, it's kind of an automated process to a degree. But having a setup like ICP, which you can say, okay, it supports these two moves from Bitcoin, and therefore when everyone's crying because the market's crashed, you're like, well, this is an opportunity. But it doesn't mean that I'm going to enter blindly. I still need to look at the market and think, right, what does Bitcoin need to do for this trade to have the probabilities back in its favor, right? And I need it to retake that moving average, just like I need this chart on ICP to just get on the opposite side of this. So it's not bearishly retesting, it's flipping back to support again. And That's what I want to see, because ultimately, in order to get the perfect entrance, like you were talking about, you have to be in a moment of uncertainty half the time, right? And you have to be, because it's like buying red is not exactly a joyous experience all of the time, because it's scary. You just got to have probabilities in your advantage. But yeah, so that's my criteria.
Yeah, but don't you think that's always the case? I mean, we are dealing with the markets here. It's like there's always that element of uncertainty. That's just a given, don't you think?
Absolutely, but if you can find
Yeah.
a trading opportunity within that ambiguity, then that's
Yeah.
great. I think the key is don't know what the current market weather is, right? And just be mindful that not many things are going to be playing up. But as you said, this setup has been planned for in advance. We've planned for this, and therefore it is here. And if I see what I need to see, then I'm going to enter it, because and it's simple as that. And if I look at Bitcoin dominance, it supports the idea. If we do get a bounce from Bitcoin now and it makes a bit of move, then this will work in my favor. So a few things are lining up where I want to be. I mean, Paul G, any alternative thoughts?
No, I do like the. I'm a really big fan of longer term charts that have that big cup and handle pattern. I will say, I took advantage of gold back in like 2019 when there was a massive cup and handle also forming, like on the weekly chart over multiple years. I don't know, you could maybe, but like I do like the fact that over months of time that is forming somewhat of a cup and handle pattern. I'm not a huge pattern guy. I don't have a whole lot of patterns under my belt or anything. I just trade a few, but on the longer time frame, cup and handle looks great to me. But it's just like you were saying, you just really need to see a little bit more accumulation occurring kind of where it is right now, and that it doesn't falter below that kind of channel that you have marked out there, because then you could really start to see probably some sort. I mean, there would probably be some sort of event occurring that would assist it in that direction, I would think, that would give Bitcoin the excuse to falter like that more easily, I should say. But yeah, I don't know whether do you, when you look at Bitcoin as an asset, and when you're trading it, do you trade it from the comfortability of
Your
thinking
home?
of no, but then from the comfortability of it being like more of a store of value, or do you trade it from more of of knowing it's or assuming that it's more of a risk on asset? Is there a different like perspective in your mind when you're trading Bitcoin on a longer term time frame like this? Like you look at it more as a store of value or a risk on, to then maybe keep you on like certain guardrails when you're trading it?
Yeah, guardrails for sure. I mean, it's an ever-changing. Bitcoin is an ever-changing asset at the moment, especially the last 18 months to 2 years, certainly since the ETF have launched. So the perspective on it changes, but ultimately, it's I look at it as simply put, observing the king and what it's doing, and trying to figure out what it's thinking and where it's going to go based on that. And then if I think the king is going to open the gates to the keep, to let everyone out to play, then that's what I'll do with altcoin trading, and that's the way it goes. But my perspective will always be shifting, and the way I'll get data from Bitcoin will always be shifting based on the context. And I think that's the most important thing, because whatever strategy I was using for the last 2 or 3 months in terms of interpreting data and interpreting price movements and all that kind of stuff, it's different now than it was then, and we always have to essentially adapt. But I think the key thing, I wanted to show you this very quickly, then I'll hand over, because I think when we're faced with Bitcoin in these situations where it could, of course, come down here, we need to see a little bit more before entering a trade, which is the whole plan. This, I think, represents the safety net that Bitcoin has at the moment. So just very quickly, this is what I'm talking about. It's a different state of affairs now than it has traditionally. So perhaps the way I've been brought up to trade and interpret Bitcoin's data points has been a bit more binary previously, but now it's a little bit more open. So this is so basically over 30% of Bitcoin's circulating supply is now concentrated in the hands of about 216 centralized entities, according to some blockchain data. And you can see here really straightforward that look at this represents public companies, this represents private companies, and this represents government. Now look at this. Look at this. This is like the ETF time.
Where's your cursor? I can't see your cursor.
Sorry, it's just here.
Yeah.
I'll try and yeah, it's turned into a cross on an image, but you can see this massive increase in institutional adoption while exchange holdings just stay the same and maybe kind of head off. So when we're looking at charts and we're looking at Bitcoin, it's very important to know what's going on under the hood, and this is just growing immensely. So I don't think we're in for any particular scary price action from Bitcoin following these events. All it means is that, like Jannie, you were teed up for a good trade yesterday. We've had some bad news events. Now we just got to wait a week until things settle, unless this weekend I get those signals I need. So I'm very bullish on Bitcoin, but this sort of thing doesn't inform my trading. It just makes me sweat less when I think about where Bitcoin might be going in terms of downwards, right?
Yeah, that expansion from like mid 24 to now for public companies.
Crazy.
That's very interesting. Yeah, that's an interesting tid point.
So I don't like people aren't scared of Bitcoin at the moment, because when you get these, because you get all the news articles, like you said, just coming out like, oh, Bitcoin's going to crash now, it's over for Bitcoin, just because of one little correction. So it's just splash cold water. But
yeah, they've got nothing else to write about. They've got to come up with something. They've got a boss telling them, hey, you got to write something. It's got to be exciting. Remember, fear works.
Some
extreme emotion.
Or you, so at least it can make sense, right?
Yeah. Yeah. Well, I mean, are you going to watch Paul works 7 days a week, Paul G. He does.
That's
yeah.
good.
He works. Well, I don't know if that's a good thing. I'm concerned about him.
Hey, if Paul likes working 7 days a week, that's
I know
great.
anything about liking it.
It's like, yeah. Well,
somebody's going to do it.
Somebody's going to do it. Yeah, you're selling yourself short, Paul. Yeah, I think I just to add to what you've said about the Bitcoin fundamentals, it's definitely bullish, and that's actually a point I was trying to make. Was it this week or last week? I don't even know when. Maybe 3 weeks ago. I don't know. But we were talking about fundamentals, and I explained why I'm not interested in fundamentals, right? Because it's got very little to do with how successful you will be in your trading. Very little. Right, because you can have my bias on Bitcoin is also bullish, okay, just based on price action. But when you look to, and I'm not talking about investing is a completely different animal, because you'll buy dips. Okay, if you invest, you just it goes down. That's a great opportunity to just add to your position if you want to keep it for the long term. Trading doesn't work. That's the worst thing you can do when you date or short-term trading, swing trading. You don't add to a losing position because you typically trade with leverage, and that's crazy. You don't do that. You need to get out when you're wrong or that kind of thing. So you can be right on the fundamentals, but it doesn't mean you'll make money. You still need to pay attention to the price action, the charts, and everything to line up and make sense. And then that needs to line up with your bigger picture. And if you are focusing on fundamentals, you still need to. It's all about technicals. You still need to. The chart still needs to make sense before you actually place that trade.
Yeah, but I mean, for me, it's a slightly subtle difference in how I interpret the data. So if we think about trading, certainly in volatile markets like crypto, it's a constant effort to maintain emotional control and stability in your own mind to make sure you're perceiving the market correctly. Now, if I'm particularly fearful, looking at some of these kind of these data points can just make me less fearful and look at, because we can all look at chart, we can look at the same chart and have 3 different opinions on it, right? Depending on how. And I think that for me, it's like, it's okay, everybody, just give it a few days and then we'll have some trading, as opposed to, I'm done with Bitcoin. I'm just, you know what I mean?
Yeah. Look, I mean, I think at the end of the day, it just comes back to, ultimately, it comes back to your playbook. You needed to have a playbook, and this is your setups that tends to work best for you, and you just wait for them. That's it. And when it lines up and it sets up like Bitcoin did yesterday, you take it. You take the trade. Sometimes they won't work. Yesterday's one didn't work, but I mean, the previous one with that, I just showed you that inverse or show that a divergence in price. That was a beautiful 1 to 11. And the next one on gold as well, I'll just quickly show you. Maybe I won't because we're out of time. Okay, I don't care. I've already said I'll quickly show you. Damn it.
Yeah, sorry, Paul G. I think we've run out of time for you as well.
No, don't. It's okay. Next time we'll go into some of my setups and whatnot with TPO analysis, and we'll get it done. So
yeah, it'd be really
Okay,
great.
great.
Really interesting.
Yeah. So there's a few seconds left. I just quickly want to show you. This is a beautiful example of just a clean touch on the 1 hour time frame on gold. Right there. Right. You see that engulfing candle? This is the 1 hour. So clean touches needs to come off the 1 or the 4 hour. Beautiful engulfing right on the daily support. I let it run to close this gap. That was a 1 to 5. So that was a 1 to 11. That was a 1 to 5. And then one coming off the touch of the third touch. That was a 1 to 3. This is all last month. Beautiful last month. This month, very different results. I had 1 break even and 3 losses for this month so far. So, but that's just how it goes. But that was just an example. Anyway, guys, Paul G, it was an absolute pleasure to have you in the session today. Welcome again. Looking forward to spend a lot more time with you, man.
I agree. It was a pleasure, an absolute pleasure to be with you guys for the last hour and a half. I could talk for another 2 hours with you guys if we had the time.
You won't feel that in a week.
We'll see if you can say that in 3 months' time. Yeah. All right, but Paul and Paul G, it was great to see you guys. Have a great weekend. Robert, Tom, everybody else watching, thanks for watching. The next session starts in half an hour from now, but from us, have a great weekend. We'll see you next week. Cheers, guys.
Cheers.
Cheers.
Hello, everyone. We are live. Welcome to the third session of today. It is a Friday, just waiting for Coach Michael and Coach Aymane to join. We can get the show on the road. I hope everyone's doing well today. Let me know in the comments if you're watching. And I hope all your trading days have been good. Not a bad day for me either. They should be here any second. We had a few issues with our streaming platform, StreamYard, yesterday during the session. So if you were watching and it abruptly ended, we do apologize. It was an issue with StreamYard across all their... Oh, Aymane's here. Hello, Aymane.
Hello, hello, hello.
How are you?
I'm good, and you, Coach Sam?
Yeah, very good, very good. Michael should be here any moment. He might have a few technical difficulties. I think a lot of people have been having technical difficulties with StreamYard recently. So,
yeah, yesterday it was like it shut down also for you guys, I think.
Yeah, it just completely went offline. It was down
is the mic? Sorry, Sam. Is the mic okay or not?
Yeah, your mic is good. Yeah.
Now is it better now?
Oh yeah, much better. Yes, very good. I'm just going to give Michael a message, see if he's got any issues.
Yeah. So to update a little bit what happened yesterday after the session, if you remember, guys, here is Michael.
Yeah, he's just joined. Hey, Michael.
Hey, what's up, guys? What's up? Sorry. I don't know what's going on with my camera today, but apparently it doesn't want to work. I don't know why.
No problem. You're here now. Yeah.
Camera is good. You are shining, Michael.
Oh, really?
Yeah.
Oh, you know what it
camera
is? It's this new light in front of me. I got like a little desk lamp.
I think this camera is much better than the previous one.
It's the same one.
It's the same camera.
Oh, it's the same one. Okay. I heard like
a little desk lamp in front of me now.
Okay.
But there's one thing missing, Michael.
I know my light's in the back. Right.
Yeah, what's going on?
No trades.
I wanted my camera is actually up here. I don't even know why it's not working. I have no idea. There we go.
No idea. Oh, there we go. Much better.
Yeah.
You know what you need?
There's only one though. I don't know why the other one over there is not working. It's weird.
Oh. Who knows? One is good enough though. That's all you need. Aymane, looking at you. You need a light.
Yeah.
He's gonna get the exact opposite of what we get because that's what Aymane likes.
Of course, it only makes sense. It would only make sense.
Michael, you need just this camera like this to zoom in, zoom out.
Right.
Oh, it stop doing it now. Fix itself.
The market when we finished the live yesterday was crazy.
I know,
guys. You remember those big orders when we were talking about those big orders?
Yeah.
And then of course I exit after the live. I got out from the trade, but it went 400 points after I entered. And the funny thing is, there was no war at that time. There was no attack on the Israel attacked Iran at that time. But we saw it. The crazy part is we saw on the footprint 1 hour before the attack. Those
you can see.
You remember? People
knew.
That's for me the one thing I was thinking about all day. 1,000 cluster, and we were talking about, let's say there is some big orders there, and there was no news at that time. After 1 hour, we saw the market start to melt down. So for me, I was saying, wait a minute, there is something here, money, war.
100%. I mean, that's always the fueling. We're not going to get too political here, but let's be honest. We every trader, every person and their dog knows there's a lot of money in war, and
Yeah.
Some people have insider knowledge. They know when an attack is about to happen, when someone's going to strike, and they'll, well, take advantage of that situation. And it's just, it is what it is. But you're right. You saw it on the footprint. You saw it happen before it happened.
Yeah.
It's true.
And that's the powerful thing about the footprint. Yes, it's not, let's say, the secret sauce, but it gives you a lot of help to see if you want to stay in a trade or you want to exit or you want to enter. So it gives you an idea.
Yeah.
So yeah. Today I took a nice trade, A+ setup.
Oh,
very good
love
trade.
it. Love it.
Yeah.
Well, today is the last day of the week. I get to decide who's going to get this $1 million in capital, whether it's Aymane and it's also determine who's going to actually trade what next week.
I will.
For me, Sam is always the GOAT. I am. I will trade ES next week. So let's put it this way. Okay.
Okay. Well, you made my job easy. He gave up. He gave up.
Yeah. Let's put it this. Sam, we learn.
Aymane,
we learn a lot from Sam.
I think you're winning anyway, Aymane. You called the trade yesterday.
He had that one good trade. Yeah, he had that one good one.
Exactly. Like you're winning. I had one decent trade, and I think that was Michael. You weren't even in that session. That was with Howard. I had one.
That was on Tuesday. Must have been Tuesday.
Yeah. That's the zero drawdown one. That was really nice.
Yeah.
But Aymane is. I mean, okay, fair enough. Yesterday, the stream went down when you took that trade, but we all know that trade smashed it as well. So you called it right. You're winning. I would say Aymane is definitely winning at this moment in time.
No, but you called like some good trades also on Monday. You remember that trade, Sam? Like you enter, we didn't even see the zero. We see just +5 or no, plus a little bit of dollar because you went, like, you put the wrong contracts, but it went straight away.
Yeah,
pure luck. That was pure coincidence.
Hilarious.
Sam is too humble, you know.
But I think there's still going to be some decent trades in NQ as well today. The market is very nice to scalp at the moment. Very, very nice scalping market. Got loads of nice little gaps everywhere. And the reactions are quick, like they move nicely. So I think we're gonna have some decent trades in this session. Hopefully, we'll see.
That trade that I was talking about yesterday on AUD CAD. After the session, I swung it and it actually hit TP in Asia. Let me show y'all this crazy setup, right? Because I told y'all, like, I missed EG. Well, I can't say miss because it didn't give me an opportunity, but EG was a setup for me that I couldn't get in. GBP CAD, same exact thing, right? And then it was also gold, which I took and got stopped out in. So that's my loser for the week. But I took AUD CAD last week and gold. I'm sorry, silver. I didn't take this because this actually set up, and I just want to kind of point this out. But so we got our M top, right? Remember, guys, run, retest, drop. This is exactly what it did. The only thing was this happened at 2 o'clock in the morning. Was I up for this? Of course I wasn't up for this. Of course I wasn't. But just look at the trade. Like, look at it. They gave you everything you needed. The pullback. Let me close this a little bit. Right? It gave you the. Let me take. I'm gonna move this because it makes it look like it's off, but it's not. Right? This move right here after the 1350 cross, which was right here. Right? Level 1 trade now. You're expecting a little run of the first pullback to the 50 EMA, which is right here. This red candle that closed below everything, smashed it, y'all. In one candle, this thing went all the way down here and hit TP in one candle. But was I up for this? Again, of course I wasn't. So I missed this. Euro GBP, let me go through them actually. Euro GBP does not count. Why? Because they didn't give you room to get into this, as I mentioned. 5,200 cross, you got the pattern off the 200. I don't know why they're just all the way over there. It should be right here on this huge candle, right? But if you look really close, you can see that the 13 was not closed above. They gave us a wick above. If this closed up here, yes, this would have been good to go. But the fact that they yanked it back down and then closed below and ran up with this one candle, not enough room to get in. Like this is a no trade for me. This would have needed to close, here, somewhere, but it can't close all the way up here. Like that's the whole move. It's dead at that point. So Euro GBP on Tuesday, pass because we couldn't get in it. Same thing with GBP CAD. Right? Same exact thing right here. We had the, let me scoot back, 15,200 cross, move off the 200 was right here. First leg, second leg, closed below right here. Again, you could not have got into this because the move went from all the way up here to all the way down here in one move. Like that's it. That's the whole move. Could you have taken this pullback to this price? Yeah, but that's not really my setup. Like that's not a setup for me. You'd have it's been a little bit risky to take this. But could you have? Yeah, because remember, it's always the break below this area and retest of this area, which is right here. So could you have taken this? This would have been a zero drawdown trade. Of course you could have. But again, this is not a setup for me. Mainly because it only touched the 13. Had it touched the 50, then maybe I would have thought about it. But also, you see how the market baseline has, yes, gone below the static, but this RSI line is way down here. This would have needed to come much higher than that, like that, to take it. So this was a pass. Again, 2 trades on Tuesday, pass. Actually, this was Monday. Monday, GBP CAD, pass. Euro GBP, Tuesday, pass. Then,
sorry, real quick. I just took a trade on NASDAQ.
Go ahead.
Sorry. I had to hit the buy button before.
Buy.
Yeah.
It's great. Maybe
Sorry.
Sam stop loss. It's my entry.
I
literally just bought as we tapped into this area here. But I might have to exit because there's another area here. If it rejects or it doesn't break this area, I gotta get out. There's no way out of it. So I haven't even set a stop loss or a take profit yet.
My area, Sam, is a little bit below the wick. It's maybe 10 points below. No, to buy.
To buy.
Yeah. And I have an area where you have this void to sell, but it's not confirmed.
I want to see it break this area really nicely. We rejected nicely on this area, 66 contracts at the bottom, which is good. I really want to add, starting to reject. I don't like it. Nah, come on, don't reject. Come on. 32 at the top. Let me look what the 5 minutes saying. Because the sell pressure is quite strong. The contracts are quite big, but I feel, I mean, we had the reaction. The reaction is there. I could have got out at the top here as a true scalp. Yeah, it's gonna still. The only thing as well, TradingView's got an area here, which is good. So my stop can go below there if needs be. Come on, come on, buyers. Come on, buyers. You're doing so well. You're doing so well. I don't want it to break this area. Come on. All right, retest it. That's fine, but do not break it. Do not break it. I don't like the price action though on the candles. They don't look great. Let me see what the footprint on NQ on this one is. By the way, it's like super hot today in the UK. Like I'm in a sauna essentially. I don't know. We got some freak heat wave happening. So if I'm a bit sweaty, I do apologize. Why do these candles look so weird? Come on, don't break it. This might be a failed trade. I'm not going to swear. It's breaking it. Give it another couple of seconds. Let me see the full area.
What's the temperature there?
Nah, we're out. Yeah, it's broken it. All right, we're out. Damn.
It's on my
Had a
area,
reaction.
but still I didn't buy it. Now it's literally in my area, because if I switch to 1 hour, there is a big wick at the low, so we could go mitigate that.
Trade was the wrong way round. I got it. Very annoying. So, all right, we broke through this area. Right, we broke through it. Rejected off this one. Came back. Oh, what was that? I don't know. Came back, retested it on the other side. I should have got out and shorted it there. I shouldn't have held on to that. That was. But there is another trade. If we come back into this area from the other side, I can now short it. So there is still. Here
okay,
we go.
I'm in for a small reaction. Ooh, okay.
I can short it in a second. Come on. Go a bit higher. Go a bit higher. Come on.
Nice. I'm in a buy.
You're in a buy?
Yeah,
okay.
From the low. But I will manage it because we still have a wick at the low. So
I need it to get to here. Then I'll sell it. Come on. A little bit more. Come on. That's it. A few more pips.
Nice.
Here we go.
Nice.
I'm in. All right.
Can I share?
Yeah, you can share.
So 2 minutes left for this candle to close. I want it to flip green. If not, I'm going break even. So I had this area here, took the previous low, close green. I got actually a nice reaction, but what I don't want to see here, we have some big, like some orders, buying orders. We had it here also, and we continue lower. So if I see that next candle we are still pushing lower, I am out. So what I want to see in the next 1 minute or 2 minutes before this 5 minutes candle to close is to flip green. Just come back to this supply. We have an area here, maybe before going lower. So
nice. All right, I'm in a short position as well.
Let's see. The buyers here are getting absorbed. Let's put it break even. I'm break even.
I'm in a short position. It's going quite nicely so far.
Nice.
I'm annoyed I didn't recognize the rejection early enough and got out of that first trade. I could have got out, shorted it from the retest. I don't know what I was thinking. My brain was not working. That was a perfect opportunity.
So we have, okay, just keep take this high here and I will be good. Come on, come on. Nice. Okay, nice. Nice.
It's going nicely. And
You are buying or selling some?
I sold. It's kind of just by my entry.
Of course.
But I think it's still gonna go down. Okay. Flip. Let's see the 5 minutes. Ah, it's not looking perfect. Come on, break. 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 Nice. I'm out. Good one.
It's broken the area. It's completely. I'm out. It's almost broke, but it's just broken it by a wick. I'm going to give it another few seconds.
Nice here.
Giving it another few seconds. As long as it doesn't close above it. That's all right. It's all good. Don't close. How many seconds left? 15 seconds. Okay. 15 seconds. 7 seconds.
You can take back the chart, Sam, if you.
I will do in a second. I kind of don't want to take my eye off it. I'm trying to look at the depth of market and everything. Give me 2 seconds.
Yeah. There is also here volume range. Nice rectangle. We have this area here. So so we are between this area here, like I said, the supply, and we are between this area. The thing is, like on the 1 hour, we have this big wick here. Still, it's not mitigated. So I'm still expecting maybe we could come back, mitigate this week, and then back higher. So there is not enough absorption, let's say, to push all the way lower. As you can see here on the 15-minute delta, 166 here. We continue. Nothing big here at the top, just some, let's say, normal. Nothing interesting that's maybe we will flip all the way lower. So that's why, let's say, one of the reasons I took the buy plus this 5 minutes area. You can see we took the previous candle low, close green, continue. So now we are respecting this supply again. So if we came back to this 1 hour, this 1 hour wick here, we still have, like, let's say, option that we will come back again higher here. So when I see the weekly candle, how it looks like, I'm expecting the weekly candle will close a little bit bearish here. Not like this, but I'm expecting it to close maybe at 21,700 at that range. So 21,700, it means in the next 4 hours before markets close or something, we will be between this supply here and this wick here, and we will see.
Very nice. That was a very good trade, by the way.
You know exactly what he's doing.
Thank you. But your trade, Sam, also was good. Just I think you hesitate to exit at the.
Yeah, it was very annoying. And now I'm stuck between two zones. I'm holding it. I got my stop, but I don't know. I have to wait at least 5 minutes for this 15-minute candle to close. I don't think it's going to close that bullish. It hit off the point of control as well. I'm in, yeah.
Buy or
short, sell. I'll get my screen up. Yeah. So it almost, I don't want it breaking this zone here. We're kind of stuck between these zones. I don't want to break it. And you can see in trading view, it's in this zone. It did break it, but it only broke it with a wick, and I was too quick. I thought it would close nicely below it. Point of control's there. It rejected a point of control. I just don't want it closing above here, essentially. So I'm hoping in the next few minutes. Either way, if it breaks that wick there, I have to get out. If it closes above, I'm getting out. There's a few good things, like lots of volume on the buy side trapped at the top here, which is nice. You know, that 55, 53, that's looking good. It's looking, I don't know, there's a few things I see that's it's not good for the sellers, but there's a few things I see as good for the buyers. I can also say the same thing. This 88 and 59 for the sellers is not nice with that instant reversal. I don't like. But the market is it's going to be like a doji candle, I think.
Surprise
cumulative. Yeah. But if it does break and closes nicely below here, and we get past the point of control, I think we could even go back down to these lows here.
I think we're gonna go down now. If you check, let's say the 15-minute, 5-minute delta, we just printed 136 at the open of 5 minutes candle.
Yeah, got that nice big volume. It just played around a little bit. It just did stupid stuff, but that's fine. Okay, this area has now been filled and it's moved down. This area has now become that, which taps into the wick, which is looking good. This area now becomes there. It's all moving as the volume is shifting about. Yeah, this is looking a bit better. That 5-minute wick, that was unnecessary from NQ, but nonetheless, it's fine. If we do break it, I really hope we do break it and close below, then I will target this area.
We will break some. We will break lower.
That will be my TP all the way down here.
Yeah.
Past the point of control, all the way down here is my TP. Because this is all nice and clean. Like I don't like that the point of control's in the way, but it's fine. If it ranges a bit, that's cool. It can range. I've got 1 minute 45. It looks like it is going to close, well, in the middle of it, which is fine. As long as it doesn't close above. 5 minutes looking nice. Depth of market, it's just looking the same. Getting back. Got very close to my stop. You see, very, very close. But yeah, all the way down here is my target. So it's actually quite a big trade. It's not even a scalp. I'm trying to catch quite a big move here. All right, now I need it to break and close below this purple area here. I need it to have a clear break, not a wick break. See, I bought into it, and it actually it didn't close. It just wicked below it. I was too premature to jump in. I should have waited for that confirmation, but it's fine. Mistakes happen. I do like the 162. That's looking nice. 91 at the top. That's looking good. Don't like the 150 here. I want these sellers to be released. Release the sellers. That's it. Come on. Clear break now. How many seconds are left? 15 seconds. I need you to really break down. Come on. Give me that push. Come on. Give me that push. There we go. Come on. Really break down. That's it. That's it. Now stay below. Stay below. Really push down. Good. All right. I'm happy we broke it. I didn't quite break it on TradingView, but that's fine. Broke it on Go charting. Come on. All right, I'm going to let this play out because this is going to take a bit of time. Because my TP is quite far away. I'll set alerts and yeah. One of you can take over. Robert did ask, Sam, do you not have AC? No. Air conditioning is not a thing in the UK because it's a very cold country. Like, to find air conditioning in the UK is rare. I mean, you can buy it, but it costs, like, to get air conditioning in your house. I've had a quote done before, cost about 10 grand on a 4-bedroom house.
What?
Yeah. Crazy.
What?
It's so rare. It's such a rare thing to have.
In the UK, is such. Seriously?
Yeah, like we rarely get, like, it's always cold here. Like, why would you ever need air conditioning? Do you know what I mean? It's like having central heating in Dubai or something. You just don't. The houses there do not have it. You know what I mean?
Yeah.
They don't know what heating is. Like, they don't need it. But everyone has AC there because you genuinely need AC.
It's a good point.
It's ridiculously expensive. AC.
It's like here, like we hardly ever use the heat. Like, it makes no sense to use the heat here. It's AC. Yeah.
That's it.
So it's the exact opposite there. Like, we never use the heat. The AC's on right now. But y'all never use the AC. Y'all need heat though. It's hilarious.
The funny thing is though, like, English homes, right? They're built to keep heat in because of how cold it is. So when we do have like hot days, which are rare, but they do happen, like, the heat is just trapped in. Even when you open up all the windows, the heat just won't leave. Like, it's like it's like a sauna. It's nasty, man.
That's hilarious. Yeah, that's a big difference for sure. Once again, like, when they get cool here, instead of us, the only difference is we don't use the AC. We just open up the windows. Because like in the winter, it gets a little bit cooler. There's no need to have the AC on then. You just open up the window, the net's there, the breeze comes through. But the heat, I've been living here for almost 3 years. I've never used the heat, not one time. Not once.
I can imagine.
The thing is, like, when it's really hot, even opening the windows, like, it became even worse.
Yeah.
It's bad, man.
Yeah.
I will say one thing about here is we so close to the water, we get to breathe. Like, this city, we get a breathe. Like, if I open up all the windows right now, of course it's not like the AC, but you're gonna feel the breeze. Like, it's a nice breeze all the time, damn near all day, every day. It's a nice breeze, except when actually, I don't know. It's a nice breeze all the time. I like to think. It's not like Vegas. I don't know if y'all been to Vegas before, where it's like very humid. And it's not like there's no breeze there. It's hot. Yeah.
Yeah.
Oh,
yeah, no, it's nice.
I might have something.
Go for it.
I might have something. Let's see. Matter of fact, I'll reshare my screen from earlier. I forgot where I was at.
I think today, after this session, I'm going to go in the car, turn on the AC, cool off.
Sorry, guys, give me 1 second. I will be back 1 second.
Yeah, no problem.
Okay. So GC, as I mentioned earlier today, that wasn't a play because of this move here. It wasn't here, it was actually here. So missed GC. Well, not missed, but didn't give us the opportunity to get in. Then we took gold. Gold was a SOB because this thing did not go. And I went over this for so long. I went over this 2 hours in my session yesterday. And I went over it for a decent amount of time today. Funny enough, like, I hardly ever get a chance to show when these don't work out, but this is a perfect example of when it doesn't work, right? We have the, let's say, hey, oops, I don't know what that was about. What's happening here? Come on. Let me just scoot it down. All right, so we got the perfect like head and shoulders pattern here, right? This thing runs down big, right? We're looking for that cross, which happened here. Next thing we're looking for is the M off to 200, right? This doesn't count because market baseline is still below the static, so that's nothing, right? But the next moves, right? We got this M, well, first leg, second leg, and close. That's what you would expect on the move. And you're targeting this 200. You think this goes right here. I was live when this happened. This very move literally came right against me, stopped me out, right? Well, close. I had to close this at a move like this. So you had to close it. But still, this move has been up ever since. Like completely the wrong direction. Right? I will say this is right when that surprise news came out about the interest rates and have to borrow 65 billion dollars or something. So, you know, a fundamental move, well, information was missed here, I'll say, but this is actually where I'm going to implement Aymane's strategy a little bit more as far as the financial juice, because I didn't see that on Forex Factory. That wasn't a play. I would have known that and not jumped in before, because we did have news right here. This huge spike, it was 8:30 Eastern, right? So that's why I stayed out until this passed. So when I saw this run up, grab all the traders long, close below like this is supposed to be good. Like this would have been a nice move to the downside. And news came out, smashed me. So I lost a full 1 on this, right? So that kind of sucked a little bit, but it's trading. That's how it goes, as you guys already know. And then the same thing, well, something similar happened on silver, except silver actually played out, which sucked. Because I think I was mentioning that this closed at 2 a.m. Eastern. So of course I wasn't up for this move, but same thing. We got the M structure, right? We got the break below this area. We got let me mark off that area actually. We got the break below this area to be about right here, right? This is the low of that wick, broke below, came back, retested the 50. We want to start paying attention to 50 EMA. One candle, this is the 1 hour chart. And one candle, once it's closed, you make all your money in 1 hour, right here. Smack it. Absolutely crushed it. Right? This was a stop from right above. TP went right below. This is a nice 3-for-1 move, almost 4-to-1 move in 1 hour. Yeah, it's silver, so a little bit exotic, but at the same time, this is the move that I draw up for you guys every single day. Right? This is the high probability setup. This is my #1 setup, the master trade. Coming off the peak, 1350 cross, run, doesn't touch the 200, which is right here, pull back to the 50, drop. Market baseline, as you can see, went below the static right here. Whoops. Money. This whole trade was money. It just happened at 2 a.m. in the morning. Crazy. So I was not here for.
It's annoying when that happens.
And then they had like this little. Yeah, it's annoying because they could at least give me my money back. Got to go. At least. At least they could have did it, but they didn't. And that's just how it goes, right? From a trader standpoint, once this happened, you should have been up. You should have knew that this could have been a possibility, which I saw this before, but I don't trade London. I'm not up at 3 in the morning. 2-year-old, so I'm not up at 2 in the morning at all. I'm happy she got to sleep, and I'm asleep too. Right, so beautiful move. This was actually what I want to say the trade of the week. Right, like beautiful trade, guys, just beautiful. They gave you the money so fast it made no sense. And then they went, because your target was the 200, went right to it. Smash TP, 1 hour, you were done. You risked $1 to make $3.50 minimum on this one move, right? Just sucks that I wasn't for it, but this is out of my trading hours, so not a big deal. maybe something I can't implement is if I see something like this early, you know, 4, 2, 3, 4 o'clock, I gotta be up for that day. I need to do something just to be up for this move. So as always, refining trading plans. That's what it's all about. Maybe I'll add that to it. Maybe I'll continue to sleep. We never know. Right. But yeah, my move from yesterday on AUD CAD, I was trying to show you guys, smashed it. Right. This is a 4-hour move. Right. So just beautiful, guys. If there was a second trade of the week, which I don't do, only do the best trade of the week, there's no second place. It's only a first place. If gold didn't happen, I'm sorry, silver, if that didn't happen, which is kind of funny to say because it happened outside of my trading hours, but this would be next up. Not the same move because this is a level 2 move. All right, we got the 5200 cross right here. Next thing is, and which I want to point out really quick, I'll go here, I already had this up. Remember, this is a half a bat off the 200 EMA, right? We got the high leg to the left, comes down, closes below. The second leg is not as high as the first leg. So it needs to close below this structure right here. After it closes below the structure, it's good to go. This happened here. Same exact thing. First leg was, oops, do this. First leg was all the way up here. Second leg closed down here. Second leg was not as high as the first one, right? It didn't come up here. But it needs to close below this structure, which this candle did. And believe you me, there's not a coincidence that price came right to this wick, basically. Right? Look at this. Just look at this. Crazy. First leg, pull down. Second leg, close below all of this price. Right? It went down a little bit further, but came back to retest this area. Close. I literally, y'all saw me in this session. I was out of the money, like slightly. I think I was in at 76, and it was at 80 by the time we got off. So it went from 86 all the way to, let's say close, not even the wick, but the close. So 25 in 4 hours. One move, and this happened really fast. So this smashed TP actually for me. You guys can see. I didn't put the trigger on it, but if this was it right here, AD cross 88.76. No, that's not it. I can't tell which one it was. I think it was this one. Was this it? 80 CAD 88.76. No, because I was in at 86. I was in at 86. That's weird. I had to stop sharing my screen to show something, but anyway, this did smash my smash my TP right here in this one move. So this would be the second, if there was a second trade of the week. This was really, really, really nice. That was pretty much it for me for this week, guys. I had a very, very, very funny week. So I'll say this week one, we had Euro GBP, no entry, right? 2 was GBP CAD, no entry. 3 was gold, stopped out. 4 was silver. I'll put sleep, missed it. And then 5, AUD CAD, right? I'll put TP snack. Really interesting week for me, y'all. Like, after I've explained to y'all that it's been 6 weeks in a row we had a Mona Lisa, and then this week comes in, which was super weird. Like, I couldn't really find my footing how I would normally be able to find it this week. It's to come into it and see 2 perfect trades that you couldn't get in, that pissed me off, as I mentioned. Then gold happened, stopped me out. Then silver happened,
right? That I wasn't up for, right? And then I finally hit on AUD CAD. This week, I'm actually down 0.2%. 0.2%. Yeah, I'm actually down. This is a red week for me. After 6 weeks straight, this is a red week for me. All because of this, right? And I can't blame it on anything else, but obviously what I'm doing, right? So, 1 and 2, give or take. There was no, you couldn't get in there. You'd have been risking it to get in. Gold still would have took that. I went over this for 3-4 hours. Still would have took that again. That was just a what I would call a. We'll put equal sign here. I like to call these trades a natural loss, right? You couldn't do anything about this trade. Gold was it was gold. It stopped you out. We had news at that exact time. Whatever. Surprise news. You really couldn't predict that. Silver, I was asleep. You can't really do anything about that. That's outside of my trading hours, technically. AUD CAD, printed it. But overall, I'm still down 0.20% for the week. So red week for me. Just gotta, do better next week. Hopefully, it's a better.
You had a really good winning streak. So,
man, 6 weeks in
it
a row.
happens. Yeah, 6 weeks, 1 week red. So well.
6 weeks in a row.
Taxes, isn't it? That's all it is. Taxes, business expense.
You gotta pay the markets. Business expense. That's what it is. I'd like to be as transparent as I can possibly be with all of this, because people, I think they see us and try to aspire for this, and they don't really realize I had a losing week. This happens to the best of us, no matter what. This is just what it is. Or I was asleep. If I would have took that trade, I would have lost. I would have hit, and it would have made my week. If it was outside of your trading hours, that's not in your trading strategy. That's not part of your trading plan. That don't count. 1 and 2. If I would have just jumped in early, I would have hit on both of those. That is outside of your trading plan. There was no entry on those. So I like to break this down. I typically do this on Sundays for everybody. But yeah, this is how my week went for the most part. But just want to bring this up. It went from me having 1 to 2. It's the truth. It's the truth.
Yeah. We all have bad days, bad weeks as well. Especially if you're more of an intraday trader. Naturally, you're going to have, it's more higher chance you're going to have a bad week because you're taking less trades. But the worst thing you can do is try and claw it back. But we still break. I think Robert just mentioned in the chat. He goes, Monday, Tuesday, green, Wednesday, Thursday, red, green today. With the help of all your guys' encouragement over the past couple of months, I didn't lose control of my negative days. I'm ending green. And that's probably one of the best things you could do, Robert, because even the most experienced traders, we sometimes lose a little bit control. Today, I lost control, I'll be honest, in my trading. I ended positive. In fact,
right.
I can't even go over the amount of trades I took. I took a huge amount of trades, right? But in fact, let me get my screen up real quick and show you guys what I mean.
Yeah, I just wanted to go over that real quick just to say, it happens. And even for me, right? And just to touch on it really quick before you do it, Sam, is my first 2 trades, I could have easily lost control with EG and GCAD, right? I'm I missed 2 trades and spiral out of control. But just to know that those trades are all separate. You don't put them with this. It's you starting over every trade. Don't learn your lesson from the last one, but don't bring that pain to your next trade because it'll affect you mentally. Right?
Sorry to cut you, Michael. Just I took a short. It's really tight stop. So we will see.
Do you want to show it? I'll show you what I was going to show afterwards. You go show your trade.
So basically the idea of
all right, you're up.
The idea of the trade is purely delta. So you can see here we tapped the supply, and we are let's say if we compare the price, we have some big cluster here at the top and we push down. we see here 150 cluster, straight continuation. And here we couldn't break this 150. So let's say the cluster for the seller side are getting respected. So here also, we got this 135 here, and we're still pushing up, and the price is pushing down slowly. So I am expecting maybe we could get a straight push down, or we will come back to test this week right here before going down, and I will be stopped out. So the entry is literally here. Stop losses is above here. So we could, the second scenario is we will come back here to this week here. There is a 64 cluster with 135. Maybe we will touch this week, respect this big cluster, and then push down. So my stop loss basically it's above here, because it will be too much, because I trade the continuation. It will be too much to put it right here. So yeah, I still believe that the weekly candle, and I could be wrong, it will not close like this. It will close at least on the 21,700. So now it's just a matter of, let's say, if we will come back here, touch again the supply before pushing lower, or pushing lower, mitigate this week right here before going a little bit higher. But I think for sure we will stay between this high and this low here. That's the idea of, I think I'm gonna get stopped out on this one. Live stop loss.
My trade was going so well, right? And then the moment you entered, it started going up.
Stop loss.
I'm looking at it now. Now I'm in drawdown. I was up like $100 and something. Now I'm on minus $48. The moment you entered, it started going.
He was part of the other side.
It's Sam. I think still we're gonna see maybe this week here getting tested.
I've got my. It's on a gap right now. It's retesting a gap. That's fine. Let it retest. As long as it doesn't break it, I'm happy. If it breaks it, I get stopped out. What can you do? Do you know what I mean? It is what it is. But it is ranging right now in terms of, like, on the smaller time frame, it is
nice.
Ranging right now. So
you see this 94 at the top. This is a good sign.
Yeah, I see it. 96. Yeah, really nice. 99.
Yeah.
100. Beautiful.
I maybe I could re-enter here. Let's wait 1 minute to see. Yeah. Or we're gonna come back here again to the supply. What's time frame will close right now? So, okay, the 1 hour. Let's check the 1 hour. Okay, in the middle. Nice. It's still looking short, to be honest.
Yeah. I still feel that we're short. It's just ranging a bit, trying to build up, accumulating. We're still nicely below that gap. I think it will touch my TP, which is the next gap. It almost works like a magnet. The only thing against it is that the point of control is dead in the middle, and it keeps bouncing off the point of control. The reason it just reversed now is because of the point of control. It's dead in the middle, which is very annoying. But if the point of control was elsewhere, it would be a much more smoother experience, I think. But like I said previously, when you get to the point of control, expect a ranging market. It's not just gonna, because that's fair value, right? The point of control means people were happy to transact there. You're going to get a balanced market, which in turn becomes a range. It's when the market's imbalanced or unbalanced, that's when you see reactions happen. That's why gaps in volume and stuff like that. That's where people don't want to transact. And that's where you get these speedy reactions, because the market has to jump to another area. So, but yeah, when you're at the most heavily traded area, you're going to get fair value again, and everyone is happy to trade there. The price is fair, and you're just going to get a ranging market for a bit until eventually something happens.
Yeah.
That's a nice bounce point.
And also, like, if you see the 1 hour delta, I don't know if Sam, if you use a little bit the 1 hour, we have a
very rarely
your take profit. What is the price of your take profit?
It's 21,719.
719. I'm not sure. 21,719. 21,719.
You mean, sorry, I'm giving you the futures price, not the CFD price. The CFD price is give me a second. It's 21,700.
Okay, so we have similar TP. Just because we will tap into that wick if we will go lower. And we have, if you can see here on inside the wick, we have this two clusters here, 100 and 199, and we have a little bit lower, this big 600 here. So we have two here. Maybe if we came back here lower, it will be a very, very nice opportunity to buy from here. We will see.
The market's been a bit. We got the hourly candle closing in 3 minutes.
Yeah.
The only thing I don't like about the hourly candle, do you see the huge amount of contracts on the wick, the bottom of the wick, the sell contracts? I really don't like that.
The only thing that is still, let's say, keep me positive about this trade is we have also in the middle this minus 191.
Yeah.
So yeah, we have some here. So the first 5 minutes of the 1 hourly candle, we will know if we will get stopped out or not. You know why? Or if we will come back here quickly, respect this cluster and push down. If we start, let's say, if we start the momentum is start to push up, I think we're gonna, those here are maybe potential absorption, but I don't think so. Why? Because here you see here, like, we have 210. So at least to break this high, we need some more, let's say, power, but I could be wrong.
Yeah.
I should have let you trade alone, Sam, this trade, and not answer. I sabotage.
This is the first time that y'all actually on the same side, though. Like, I can't believe it.
It's true. Like the moment I executed, and it went straight up.
Yeah, it's the first time ever. Like, I'm glad this is already being recorded.
This is no one's gonna believe it.
45 minutes.
We're on the same page. But all right, we'll let this play out. What was I was gonna tell Robert something. I forgot now.
Yeah, let me show you guys today's trade. The trade I took today.
Actually, I was gonna show my trades today. Yeah, that's what I wanted to do. I forgot. Yeah. We'll do that after. Go on, Aymane.
Okay. So the trade today was basically based on 4 hour area. So we had this, I call it MAC candle, took the previous low, close green, continuation. And this 4 hourly candle, we had a momentum candle respecting the area. And this trade, actually, I took one before the open, like maybe 1 hour before the open, and the second one like in the session. Same setup. So similar thing. You can see this candle took the previous low, close green, and start to get the continuation. And I traded. Let's see the first trade. Yeah, the first trade was here, so I took a buy. Okay, so we came back to the area. Oh, okay.
This trade is not looking good. It's broke. It's gonna break through. It's still within it, but I don't like that bullish momentum.
Come on, test this area and push down.
We're still in a gap. Still part of the gap. But I've seen this play out too many times to kind of know my gut is telling me.
I'm with you, Sam.
I'm only seeing what I want, like what I'm hoping to see, but I know, like in my gut, this ain't working out. This is not going to work out, this trade.
No, it's not gonna work out. You think so?
I don't think it will. I don't know. I mean, we're still in the gap. It hasn't broken it, but I'm just seeing that push from the buyers. That they just seem very relentless.
I think it will. I don't know, but I think it will work. This trade
I
is
hope so, man. I hope so.
Still valid. Yes,
it is still valid. You're right. It is still valid.
Yeah. So the first trade I took, if I remember well, it was here. Yeah. So same thing, 1 hour demand. Oh, where is it? Came back to the retest. So we had the demand here, took the previous low, close green, continuation, the retest here, and then took the first buy. I think took the first buy somewhere here, the first buy before the NY session open. The second buy was based on, again, the same thing, testing the area with a good absorption. I think 100 something on. Let me show it. It was very good setup. So took 2 trades, both of them take profit. Of course, I take partials. Let's see.
Wait, Aymane,
Yeah,
I thought you said you didn't take partials.
Me?
Yeah.
Me? I don't take partials. When I said
Aymane does, I don't.
Oh, okay. I could have sworn you. All right, maybe I'm mixing it up. Okay.
I'm a big fan of partials, Michael. Like, right. For me, it's like a drug. I always take.
Okay. Partials is Aymane's middle name.
Okay. I'm gonna say some people are like, no, I would never do that. I'm like, oh, okay. He said like I swore or something just now.
They call him Aymane Partial Mathers.
Partial Mathers.
Oh,
Marshall Mathers.
Oh,
Aymane, what do you normally take? Do you take quarters or you take halves?
Me? I take whatever I feel. No. I take because in futures it's contracts. It's not like more, let's say, percentage.
Okay, got you.
So for me, let's say if I am entering 10 or 15 contracts, for example, this trade today. Oops, sorry.
It looks like TP might actually get hit now.
Yeah.
Came in very nicely, actually.
Down and up again.
It didn't break the gap, luckily.
For example, this trade here.
Sugar cubes. I just spotted something I should have seen. Ah,
Michael,
damn. I should have got out.
What is happening? Is it stops out the rest of profit suite? Ooh, okay. It's pushing down. Okay, yes. It will break. It will break.
I'm not too sure anymore, Aymane. I think we just missed the opportunity to get the hell out of that trade with profit. Let me show my screen real quick.
Sam. It will go down.
I got it wrong, man. Here's the gap, right? We've just literally, it tapped into it, rejected hard. I don't know where I had my TP set. It's different on Go Charting. I was using Go Charting.
Ooh, high volume. Okay. Something is.
No, maybe the gap is within, because that's a huge one. So the gap. Wait, let me find out exactly where the gap is, because technically it would have hit where I should have put my TP.
It's coming back, Sam. Just let's hold together, my friend.
Okay. Yeah, the gap is actually lower down. The gap is lower down. All right, no, it's good. It's fine. The gap is lower down. I thought it was higher. Trading view
Sam,
confused me.
We are friends, Sam. Yes.
Yeah, we are. It's all good. It's this heat, man. I can't use my brain right now. It's this heat. I do think I put my TP in the wrong place. So I think it's a bit. I don't think it's actually there, because that looks a lot closer to me than that.
710.
So I might have to manually get out. Come on, push down. Let's see what the depth of market's showing. Yeah, this is looking good. I like the 118, 120 buyers here. The market's moving down.
Okay.
Now this is looking nice, actually.
We should prepare to get out, Sam. Just because now we are in a weekly, 1 hour week.
I'm gonna hold it till this area here. Trading view, it starts here, but I think trading view might be a little bit wrong. I'm gonna go with Go Charting. Technically, it's a hard one, man. Either one could be right. I hate when it doesn't line up. Where is trading views? I just hate when it doesn't line up properly. Let me go to line graph quickly so I can see. Yeah. So the gap starts right here on trading view technically. Okay, it should be fine. It should theoretically be fine, but it should be fine. It's only got a little bit left to go. I don't know how many points have we got left. I can't even read that. What is that? 72? 70. Yeah.
My take profit is 21,710, around 1110. So technically we are 20 points away. CFD, I'm saying like price for CFD.
Yeah.
Okay, that's good.
These clusters, as long as we don't close above heavy sell clusters, I'm happy.
Okay.
So you see these heavy sell clusters? If we close above them, come on, don't close above those heavy sell clusters.
Yeah. We're seeing the same thing.
It's reacting to this area here. It's reacting to this area. I might manually get out in a minute. I don't like how they're being built up here. It keeps reacting to that area, man. Why? Come on. It's being silly. Yeah, it closed above. Will it go further down? Probably, but I feel like there might be a retracement retracement, so I'm taking the money and getting the hell out.
Okay, let me share my screen.
Let me just double check.
Oh, you didn't close. Okay.
All right, let me just get out the trade.
I will wait for TP this time. Let's do.
Yeah, I might actually wait for the TP. I might wait as well.
It's going. It's going.
My TP is technically in the wrong place. All right, I'm getting out.
Ooh,
Yeah,
93 at the bottom. 93 at the bottom is not good. 93
I'm out the market.
Can't you...
I took.
Oh, you are out.
I took profit. I put your screen up now.
Oh, you looking good.
93 at the bottom. I don't like it, so I will be. So I'm out.
Hey, that was nice.
Well done. We both won the same trade.
Yeah. First time ever. First time ever. That was nice.
It's amazing.
Now
really
it's doing that.
It's gonna hit the TP. I know it will. But I don't want it to retrace. Yeah, now it's going towards the TP. It's typical. It happens, but
it's just now the let's say 15 minutes from the end of the session, but we will have a nice buy here. But we are good now. No more trades. It's better. Chill.
Like today, I think it's the heat or something. I'm not on top form today, man. I'll be honest. Not on top form. My brain is slow today. I don't know what the hell I was doing, man. I had to stop myself.
You know what is that?
Like
you know what is happening, Sam? Because you will miss NQ. This is the
Let me show you.
Last day trading NQ. So unconsciously, you don't want to say it because you have, let's say, your ego. So you don't want to say, I will miss NQ, but we feel it. You can ask Robert. Robert, if you are still there, like, you feel that he will miss NQ. And you don't want just to show it.
Maybe. NQ's been quite nice to trade. I'll give you that. It's been okay, but no, today I lost control. I'll be honest. Like, let me get my screen up. I completely lost control. This is the most amount of trades I've ever taken in a day, like in recent times. What? And here's the thing, right? Here's the thing. If you actually look at the trades I took, right? If I just stopped near the beginning, I would have been up more than trying to make even more and overtrade. Then I went on a losing streak. I managed to make it up again, but I ended the day worse off than if I just stopped near the beginning of the day when I took these two. Do you know what I mean? Like, all this was unnecessary. Didn't need to do any of that. Like, complete waste of time. This is why sometimes trading less is better. The moment you're up and you're good, just leave, walk away. There's no need to keep like trading. But for some reason, I was in the scalper mood. Maybe it was NQ, just the pace of NQ. I started missing it, and I don't know. But like, I just started scalping like crazy. No reason for it.
As they say, less is more sometimes.
I completely lost control. I had to stop myself.
It's the total thing.
Yeah, less is more. But so I'm glad when whoops, opening the Microsoft store. Don't want to do that. I'm glad when when Robert was saying that he's taking, like, it's helping him control these emotions, because it happens to all of us, man. We all lose control eventually. You have those days where just something, I don't know, you just do stupid things, and then you're like, why did I do that? There was no need for it. I could have just
as a scalper, Sam. you always lose control. For me, yesterday it was at night. Let's say I lost control. Let me show you, since we are showing screenshots. Let me show you. I just
TP hit, by the way, just now. TP would have been hit.
Dang.
Yeah.
So this is one of the accounts I use. Let's say to just take copy between the accounts, and you can see here. Let's say
scalp trade.
You see how many trades?
Oh, 47. My God.
No, but 47. Actually, it's no. But it's actually it's 20. Actually, it's 20 because when you take partials, it count like sometimes 3 or 4.
Okay.
So actually, it's between 15 and still. For example, here today it said 8, but actually just 2 trades. This is today. So normally
20 trades is not bad. I mean, it's still a lot though. Like, how many did I take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I took 16 today. Like, completely unnecessary, man.
16 for me. Like, if you see here lower, like MNQ, this is just 1 trade. This is 1 trade. But because I take partials, so it count like 3 or 4 trades. So losing control as a scalper, it's a must. You know,
it always happens.
It's a must.
You're not a scalper unless you don't overtrade.
It's a must. Like for me, like it's just you have to take just this small break between, let's say, 2 losses in a row. You have to breathe air, go to the balcony, breathe air a little bit, and came back. Because to be honest, it's not overtrading for me. Maybe I am wrong or something, but it's not overtrading for me. I see opportunities. I see opportunity every 5 minutes. You know, if I respect my strategy, why not? Why not finish the day? If let's say, and I have, let's say, my plan is set. I still didn't arrive to the max loss for the day. Why not finish the day and I have still opportunity and I feel like I am good to trade? This is how I think. Majority will disagree, but scalping, I know scalping is tough, but the way I manage it is just multiple accounts. So multiple accounts. So some of them, for example, I trade just Thursdays, just when there is a specific news. Some of them I trade 3 days. Some of them I risk more. Some of them I risk less. But as a scalper, that's why, like most of the coaches, they recommend start with day trading or swing. Of course, everything is difficult, but scalping is. Look, guys, it's no hair anymore. We lost it.
Yeah, but I mean, look, I know from my experience, if I keep in check, when I make X amount, all right, generally quite near the beginning, walk away. Then it's all generally 9 times out of 10. The more I start trading, because when you're already up, okay, you got a bit of a buffer, right? So you're not that scared to losing that much money, but at the same time, you are also scared of losing the profit you've made. Do you know what I mean? So you just become a little bit more skitsy in the way you trade, right? Right. The first trade of the day is where you're more ballsy. Do you know what I mean? You're willing to take a little bit of extra risk because you're like, okay, I have time to make it up if anything goes wrong, right? So, but the closer you get to the end of the day, the more desperate you become to right your wrongs. And that's why if you have a good start to the day and you're up like a decent amount, right? Walk away, man. That's what I found is always more profitable. The moment you start trying to, double it, triple it, make more, you hit a little losing streak, especially as a scalper, and then and today was a tough market. Like it was very, wicky. Like it moved a lot. It wasn't like a nice trend. Do you know what I mean?
Yeah.
Like
that
you
was
look at the
definitely
market.
Interesting for sure. For sure.
It wasn't nice to trade. Do you know what I mean? It was
y'all,
very.
Y'all saw what I put up earlier today. Like this week was funky. very funky. Like, but this is, I think, Amy, you asked one week about like, do I switch my strategy up? Do I go on less? Like whatever. I'm like, no, I do the same thing every time because I know these weeks gonna come, right? Like 6 weeks in a row, something like this happened. I'm down 0.2% like this week, technically. Matter of fact, let me change my thing to red. I gotta change my. I'm down for the week. I gotta change it to red. Yeah, I'm red. I'm ready for the week.
Yeah, I think we talked last week, Michael, that we are in a good winning streak. And for me, when we talked about that, from that day, I had in my mind, like, because it happened to me, you are in winning streak and you feel like it's gonna last for forever. So I always keep in my mind, because most of the time when I am in a good winning streak for a couple of weeks, all I need is just 1 day or 2 days and lose everything.
All of it's gone.
So I was keeping, yeah. So I was keeping. Let's say I start to tell my brain, stay humble, stay humble, stay humble.
Yeah.
Don't let the numbers trick you. Don't let you know what I mean. And especially for me, like this month, because I'm trading a couple of accounts, I start to see some numbers that, to be honest, guys, I never had those numbers in my trading career. So for me, I had to keep myself. Amen. Stay humble. Stay humble. Red day could come. Just know when to exit. Know when to exit.
Yeah.
But yeah, so it's not easy. Trading is not easy. Managing drawdown is not easy. Managing profit is not easy. So every day we learn something new, and we have always to keep the students inside us to learn every time, to learn more, learn more.
For sure. Because these weeks are gonna come. We know it, like, for a fact. And like for me, it's one of those things where my biggest, I say, mental check is, if I'm on a winning streak and I see an A+ setup, Mike, that does not mean put a 1.5%, 2%, 3% on that trade. That does not mean that. That just means continue to do what you've always been doing, right? Just stick to the script. Don't skip no scenes. Just continue to do the same thing you've been doing. That's all it means, right? Because we know, like, thinking the odds and thinking the probabilities, even if your winning streak was, I was looking at something yesterday. I on my Hola Prime account, I took 25 trades when I got this account, and it said I hit on 17. It's actually pretty good, right? Like, it's more than 60%, right? So
I would invest my money with you, Michael.
And that was the winning streak I was talking about, right? So I'm like, all right, when you see numbers like this, that don't mean like up your risk or anything. Like, that just means keep doing what you're doing, and you'll slowly get to where you're trying to get to, no matter what, right? So like, even a week like this, yeah, it sucks. Like, my 6-week losing streak has come to an end. But as good as Kobe and Jordan are, like, they could win 3 championships in a row, but that 4th championship was very evasive. Like, no one has ever done that, 4 championships in a row, right? Like, 3 has been the number. Even Phil Jackson, we got Kobe, Jordan, Phil Jackson, easily can do 3 in a row. But that 4th one, it just it hasn't happened for none of them yet. So just staying humble, like you said, and staying humble, making sure you're not over leveraging, and just making sure you're sticking to the trading plan. That's my biggest thing. Like, don't change nothing up. Still analyze the trades that you lost, you know what I mean? Just in case you missed something, making sure you're going over your data, but don't change nothing. Next week, I'm gonna do the same thing I did last week, and the week before, and the week before, and the week before, and the week before. Yeah. I'm not gonna change anything.
Good trading is boring, and that's what majority
sure.
don't get. Like, really good trading is just, it's boring. It's just same thing, repeating the same thing again and again and again and again. Like, bad trading, there is a lot of, let's say, a lot of excitements. Yeah. So but the good trading is just boring, because you sit and you wait, you execute. So
I like to correlate it to on a basketball tip. I don't know if you already know, but the Spurs, San Antonio Spurs. Like they had a little run where they would win like championships all the time, but it was so boring to watch them. Like it's off the backboard, there's no razzle dazzle, no through the legs, no highlight rounds. They just slowly but surely like pounded away. And it's like, yeah, they're winning championships, but it's boring to watch. But it's like, wait, are you trying to win championships or are you trying to be cool to watch? You can only pick one. And me, I'd rather win championships. I don't care to be fun to watch, basically. And trading is just like that, right? Like, yeah, it's cool to have a slam dunk through the legs, whatever, nice play sometimes. But at the end of the day, it's about buckets.
Yeah,
100%. 100%.
and Michael, like, if I can ask, how you deal with? I assume you told us maybe one time that you are copying your accounts, multiple of accounts. So how you deal with those, like copying a lot of accounts and taking, let's say, one trade in all the accounts? How you deal with that?
To be totally honest, like at this point, and I don't want to use the words I'm numb to it, but I'm numb to it in a way. Like technically, me being down 0.2% on this account, that's $2,000 for the week. That's like not much at all. Out of 1.2, that's nothing. If I was down 2% and I was down 20K for the week, I'm like, damn, a little bit. Like, you know, I might think about that tomorrow, but I'm gonna sleep just the same. Tonight, tomorrow, all next week, nothing. My main thing is, again, I like to separate them, right? Like it's either a main account trade for me, like one, or it's what I call that scratch the itch account. That's it. If I took this on a scratch the itch account, it really doesn't matter because it's a little bit high leverage anyway. But my main account that's attached to all of them is down 0.2% for the week. I don't care about that. I literally don't even care about that.
Mm-hmm.
It's nothing.
Yeah. It's a good way to look at it.
Yeah.
And you, Sam?
It sucks to think, right? Because, and just to say it really quick, it seems like it's a lot, but I think that's what messes you up, to think it at a dollar amount. Like I'm a real big component of percentage amounts. 0.2% is nothing. I would gladly give my money to a hedge fund manager who is down 0.2% for the week. Gladly, right? If you're down 20% for the week, of course that's different. But 0.2%, that says to me, he managed risk, he followed the plan, he stuck to the agreement, and he traded within his parameters. Like that's what it says to me. You know what I mean? Like I always say this, y'all. Go back to Bobby Axelrod. I try my best to be Bobby Axelrod for billions. You know what I'm saying? Like that's what I try to do every day.
Absolutely. Real quick, Robert asked, so who won the NQ Trade Week competition? I would say Aymane won it this week.
Sam
yeah,
won.
Especially with that trade he just closed out with. Yeah, he did.
Aymane had that masterful trade. It was so good, even StreamYard went offline.
Sam is the GOAT, guys. We need this bar like on the stream to say Sam. What they're saying, like Sam moved S&P 500. We should put Sam the GOAT.
Yep. Hey, at the end of the day, you know it is what it is. That was dope though. The question is, Aymane, are you going to S&P next week or ES? Are you or what's going on? What are we doing next week, y'all?
Yeah, we will trade ES next week. We will trade ES next week.
Right.
So
I want to get in this. You know what? I want to do, y'all? I'm gonna trade US 30. That's what I want to do. I'm gonna jump into information. I want to trade US 30 next week.
Sam,
indices
Michael,
gang.
But you didn't trade NQ, so now I'm a little bit, let's say,
hurt. All right. You know what I'll do? I'll trade NQ next week live for everybody. All right. See what we got. I'm gonna trade NQ next week. I'm gonna chop it down to the 5-minute chart and trade NQ next week.
That's a good idea, actually. I like that. Let's do that. Awesome.
Let's do it. So the market is melting.
I know. Should have stayed in, man. Oh well.
Robert, you said let's go, Michael, but okay, he will trade both. Okay. Okay. Yes, let's go, Michael.
Yeah,
Let's go.
I'm gonna jump in there. I can't say it's gonna be easy. I'm gonna just try to go down to the 5 minute. That's all I'm gonna do. I'm gonna look at on the 5 minute chart, and we're gonna take it from there. See what we got.
Awesome. Well, guys, we did hit time. Robert saying Sam is still the GOAT. Thank you, Robert. You're my number one fan. You were the first fan I had, so you've always got a special place in my heart, Robert. But guys, great session. Have a great weekend. Relax. And we'll see you guys on Monday.
Yep.
All right. I'll check you out next week.
Take care, guys.
Always, guys.
Robert, Sam, Aymane.
Energy.
Y'all be safe. I'll let y'all next week.
Thank you, guys.
Take care,
Sam,
guys.
thank you, Michael. Thank you.
Thank you,
Have
Aymane.
a great weekend.